Morning, friends. What's up, everybody? I'm smashing my breakfast real quick. Hang tight. And you smash that like button. Garrett throwing out the stuff. We will close in a different zone when we open today. Ooh, Garrett's calling for 10% days. Could be that day. Careful, traders. All right, y'all. I still have a cough like months later, no matter what I do. What's up, guys? Good morning. What has happened to this stuff? Oh, there's my Twitter. Let me get ready here. Let's read the news. What do we got going on today? Hi, guys. Let's close some of this down. All right. They did the tariffs, they undid the tariffs, they delayed the tariffs, all kind of stuff, and now we got the market trying to figure out what all that means, right? I have a feeling we got a down day today for some reason too. I don't know what it is, Garrett. Is your spidey sense tingling as well? Thinking about say the JOLTS this morning. That's gonna be a decent. We've been having a trend in the JOLTS coming. It's one of my favorite numbers to talk about. Labor market's been improving and going on a hiring spree, so this needs to continue. The market can't handle any bad news right now. It's a little sensitive. The market's kind of going through its teenage emo years right now. My coffee's good. Where do I get my news from? I usually get my news from the internet, from Twitter, but while I'm trading, I use an aggregator. This is the one I use. I typed it in chat for you. Wait a minute. Did we break out of the DD Vans last night on the S&P? Hold up. Well, gee golly. What's up, guys? Good morning. How y'all doing? Y'all ready to crush it today? Y'all ready to see how the Trade Leap competition, paper trading competition, already has somebody with 424% in their account on the first day? Should I even stick with this thing? Who has been YOLOing through this news? This is insane. This is so funny. I was looking at the stats today, right? Unreal. Like the first day of the competition, the leaderboard gets new. This is a paper trading contest to do, right? Let me show y'all something. No. Well, look. I'm up 11% in the first day, like a normal trader would be, right? Just trading. And I'm in 1,731st place. Winner, chicken. Yeah, I mean, you know. Only 1,700 phenomenal traders in front of me with 200%, 400% in the first day. Here's the funny part. you know, in real trading, no, I'm still going to slow and steady it. I don't know if they can keep up with that, but I'm going to 20% or 30% or whatever. I'm not going to get 100% a day. I'll trade like that. But the funny thing is that, you know, as the days progress, you notice there was about, you know, 2,000 of the 10,000. This is a math problem here. So in paper trading, right, everybody's going to max out and YOLO their position. And of course, at the start of the day, you know, the market had took a nosedive. And I noticed on the leaderboard this very particular thing. So yesterday, right? Oh, this MACD is here, not because I use it. I already feel weird. I was explaining it in the course yesterday. Oh, it's terrible. Okay. But anyways, so the idea is, you know, when market dipped down, all you did was plant full port long in NASDAQ. And by the end of the day, you had 200% in your account. It's great. And so I noticed there was like, you know, 1 out of 5 people did that. Market dipped. Let's just go on all along its favor. Nobody does that in real trading account. But the funny thing is that paper trading contests have an interesting dynamic. And it is that you have to plan where you YOLO. And I didn't even think that the first day would be it. But normally, you need to swing for the fence and get a big buffer because other people will. And in paper trading contests, you have to do it or else you don't win. So it's an interesting dynamic. But I did go up, you know. Wait, that's not even right. I'm up like 27,000. Yeah. So as I'm saying is, you know, with an 11% gain, I'm only in 1,731st place. So you got to understand that there's not a lot of smart trading ahead of me. So I have faith that this number is going to come way down as I inch forward. You know, lightning's not going to strike for 1,701 of those people, you know, 4 times in a row. So, but it just goes to show you how far of a trek I have. If somebody decides to just leave it where it is, 400 something %, that's what I got to get in a month. I can do that. I did that the last trading contest, but paper trading contests are definitely fun that way. Okay, so that's the first day's results. I wasn't doing so bad. But funny part is even if you don't win in that environment because other people outpace you, don't feel bad. It's okay. But you will see that with Trump trading, most of those people will blow up if they keep trading like that. So you got to remember, every time you roll the dice, you have 50-50 shot of it going up or down against you like that. For the most part, if you're in this paper trading contest, just long and hold long in the paper account is a strategy that I'm going to have. If Trump is talking, I'm going to just long. If he says something, it goes up good. If he says something else, it dips. And with the other half of the account, I buy the dip at the end of the day and then, or at the pivot and just hold for the end. Like, you know what I mean? That's what like a lot of people are just doing. But in all seriousness, I'm going to trade like normal, but we'll see. Normally with a 10% gain, you rank near the top, but that is interesting to see. The first day you had 400% gain in an account. That's amazing trading. Honestly, like, you know, I should just quit my job and just if I make 400%, hey, I don't need to get up the stream, do nothing. Oh my God. No, that's all they did, Keeg. That's all they did. That is the joke. So it's usually the big sell-off days or the big news days that just catalyze things. Okay, so today, right? Let's talk. We open. So I wasn't even paying attention, but it looks like yesterday we had, you know, talks with I don't know if this is earnings and talks with Canada mixed together, but we had the market did move up. We tapped that 60-68 yellow line at the end of the day. And we started pulling back. Now, keep in mind, there's two different things going on here. Number one is we got some news and everyone's delaying the tariffs, right? So I think they said they're going to delay in a month for Mexico. And I think they said they're delaying in Canada. Let me refresh on the news here. Here's a rule of thumb. And China is initiating a 10% tariff on oil and agricultural machinery. Here's the role with Trump, right? Trump wants a bull market, and he knows what to say to get one. Never, hey, what's up, everybody? Good morning. Never think that Trump is going to crash the stock market. I've traded Trump. Source, pro. I've been here. 2016 to 2020. I'm not pro trader. I'm a pro Trump trader, okay? I've been here. I did it the last 4 years. I'm going to do it again. He'll say something, and the market falls, and everyone else he knows is like, hey, buddy. And he'll be like, oh, yeah. We worked it out, so we're good. Market goes up every time. He doesn't want the stock market to fall. His ego, his legacy is all dependent on economic prosperity. His goal is to raise the stock market in value. That's exactly what he wants to do. Also, yesterday, did y'all like the little lesson that we had? That resilience. Gee, it's I made a tweet about it. If you guys saw my tweet, I kind of made a picture for you guys to check out. So this was kind of fun. I'm starting to get real funny. I don't know, maybe not that funny, but I'm funny in my head. On Twitter, you guys remember resilience, as we love our favorite tool here that just reveals all that's going on. Resilience started magically going up, like stocks. Guys, resilience is basically this, right? You have a market that closed that day and opened this day, and we gap down, all the stocks are trading over here, right? So somehow, 5 minutes before the headline comes out of the tariffs delayed a month, stocks magically started creeping above their half gap and filling their gap. Like enough market cap was ninja filling its gap 5 minutes before the stock market rallied off of the headline news. This is how fair Wall Street is to you retail folks. See, my joke was, I love Rocket Scooter, but hey, yo, can I get on that group text, please, Trump fam? Thanks, buddy. Can I get, it's like, hey, guys, we're going to work it out. Go ahead. And then everybody's like sneaking out of their shorts or getting in on their longs right here. And it's kind of like resilience and some of our other tools are very good at revealing what is. At 10:16, I was here. We were talking about it. And somebody in chat was like, what resilience is going up? What does that mean? And I was like, oh, just stocks are filling their gap. I guess people are buying the dip. I didn't see how much it was moving up. When it goes from negative to positive, it means the stocks that have gapped down have now gone past the halfway point and are filling their gap and then some. So everything that had fallen and gapped down overnight somehow was like enough market cap had done this 5 minutes before Trump had started talking. Right. Anywho, that's what trading is like. If you guys ever thought that Wall Street was going to ever be fair to you, you have to realize the evidence is there, and it's not. You're not on the inside, guys. So you got to try extra hard to be good at this stuff. But hey, maybe I will one day become important enough to join the political group text, so I may get ahead of the news as well. But we'll see. Things that make you go, Here's a theory. Ready? Hello, random country. Would you like to make some money? Great. Here's what we're going to do. Have you ever heard of Logan Paul? Let's pretend to have some beef with somebody, and let's make money off of it. All right. Well, what I'm going to do is threaten tariffs with you. He took a page out of Logan Paul's playbook. We're going to threaten some tariffs with you, okay? And, yes, play along for like a day. And when I tell you, I want you to buy Tesla stock. Okay, ready? All right, break. Let's go. All we got to do is say the word tariff. The market plunges out, and they're just sitting in that room. Let's have a talk. Well, they're sitting in the room together, just drinking champagne, toasting each other. All right, in 12 hours, we'll make an announcement that we worked it out. Hey, handsome. How are you? How you doing? Okay. Jokes aside, Clearly, somebody was in the know of the news before the news became the news, which is what life is like. Get used to it. I used to watch those OPEC meetings about production, and it was really funny. The OPEC meetings would have a camera with like a table of people sitting around, all the oil ministers from every country. Saudi Arabia, Iraq, all of them. They all have somebody there. Guy sitting there, guy sitting there, guy sitting there. And the camera is like up here facing the room. And then all of a sudden, once they all come back and sit down, a flurry of reporters run to each table. It was like this, trust me. They run to each table. And these guys like lean over and kind of like whisper in each one of them. And then within 2 or 3 seconds, the oil market moves. And then within a minute, the headline comes out. So it's like there are people waiting to run in and get the news on their earpiece. And the guy's like, we're cutting production by 1 million barrels. And then the news comes out. It's like this. There's privilege in this world that unfortunately, guys, you don't have. But it was funny watching the ministers, like the reporters are like, and they're telling them, and you could see it on the camera, and then the news comes out in the news feed to the rest of traders. It's just basically, such is the Wall Street way. All right, let's talk about today's setup, guys. Looks like we pulled back outside of DD bands. Last night, I don't know what news happened there because it might have been the China announcement. 10% tariff on U.S. oil and agricultural machinery. That's probably it. China, yeah. So that came out last night. Market was trading down. Then that comes out. Then we're back here. Now let's take a rule of thumb on this one, right? Markets are breaching DD band overnight. I'm usually cautious already for the day. Your alert should recognize that. We took our alerts class yesterday. As you see, the alerts are yellow. It means we've broken through and come back in. Now, the rules of thumb the rules are as follows. If this ratio is greater than half, I'm going to long right there with a very, very heavy trade. A trade inside of that range right there. I long at this bottom band every single time. Every time. I never not do it. It just depends on how heavy I do it. If there are considerations that have me trading smaller, it's going to be, as you guys all see, we are probably not gapping up. We're probably gapping flat. So resilience is going to be a little choppy. Unfortunately, I hate when we're flat on the market because you don't have much of a redistribution on the play with. The market chops a whole lot more when you don't gap, believe it or not. Because, you're right on that edge of filling those imbalances. They get filled pretty quick. So the market has no market maker buffer, really. It just kind of like flips around based on people. So it's very important to watch this resilience number. And essentially when you gap flat, you don't have much of a zone to play with. You just have to think about it like this. Positive resilience, you're going to get up on that side of the box. Negative resilience, that side. So we want to see what this is going to do. It's likely going to start off positive and then deteriorate. And we want to see it hug above 0 going forward. It's also earnings week. Don't forget, guys, hit that like button. I'm so happy that 200 of you come here 30 minutes early as we started streaming earlier because we're wanting to get ahead of the market. Make sure we pre-prep in the morning. Let you guys tune in early. Super happy. Wait, what the heck? What? Where'd that come from? Okay. All right. So today, AMD, Google, Amgen aftermarket. That's today. Wait, hold on. Am I on the right week? Hold on. Yep. Alibaba tomorrow. Let's see who else we got. Disney, Qualcomm, Uber. Big ones tomorrow. Big ones today. Amazon on Thursday. Got a big week ahead of us, y'all. So be careful. Tariffs coming out. Like really just, like the thing is you just, when it comes to trading with Trump stuff, don't get used to not chasing into a rally and holding for a bigger rally. Trump creates the dump. with Trump, you can always, like, now again, this is not investment advice. Please don't take investment advice from some rando on the internet. But this is investments, non-investment advice. This is Matt's history with this. With the Trump, there's always a pump. And when there's a Trump, there's always a dump. But the dump comes before the pump. Trump doesn't want the stock market to go down. He will say whatever he wants so that it doesn't happen. Whether it's true or not, it doesn't matter. You think Trump is going to sit there and let the market crash in his hands? His whole world is economic prosperity. You better believe that the moment the stock market, and we made this same bluff calling when it came to the FOMC. We knew back in the day that the market, as the FOMC were like, we're going to go into quantitative tightening and we're going to start raising rates. And we had a 1-year correction, recession kind of thing. And we knew that somewhere in here that the FOMC would say, can't do that. Because if they tighten too much and the market crashes, what happens to everybody, right? Everyone gets laid off again. And when everyone got laid off the first time in COVID, and you had this huge demand for jobs and not enough people, wages went through the roof and costs of materials went through the roof because of the shortages and the shipping shortages, and all of a sudden you had inflation. So as they are tightening policy and the market's over responding to that, if they were to crash the stock market, they would have the original problem on their hands again. We would be in a period of not only inflation, but unemployment. So if the Fed tightened it too much, we'd enter something called stagflation, which is worse than inflation. It's high inflation with high unemployment. Welcome to 1929 and onward. Stagflation will ruin. You're going to be just like that. Just like that, you'll ruin your economy. You'll ruin everything. It's a hole you can't easily get out of because things are too expensive. People can't afford it, and there's no job market. People can't get jobs to begin with. So people become poor and homeless and eating in soup kitchens and stuff. That's bad. So the Fed can't do too much to pull the stock market down. It'll remove the power that you have. So Trump can't push too hard on the rest of the world and crash the stock market and make everybody employed. See, if the stock market starts to suffer just enough, the business sense of Trump will stop pushing tariffs on other countries and making the headlines pull the market down. Do we all understand that? See, as a trader, you have to be a master chess player. That's what we are here at Rocket Scooter. You got to think ahead about the incentives and motives of your opponent. Wax on, wax off. We're going to get in his head. Do you think he would do anything at all if it was permanently threatening the stock market? That is the economic power that we have. That is the superiority we have over the world. Our labor, our market, our GDP, all of that. We've got that. So he's not going to risk collapsing the American stock market by threatening tariffs in every little country around the world. He's doing it because he can, because we're at all-time highs. The market can handle it. But you must think, traders, is that Grandpappy Trump will not ruin our good time and not spoil our party. You got to have faith. Did Trump do that intentionally? Dude, we called shenanigans for so long in 2016. I used to think I was just being paranoid that like maybe he's just being, fair and not. No, homeboy made a meme coin. All right. This guy's doing it for the money. All right. That took away all doubt in my mind that I was wrong in 2016, that there's a collusion of buddies on Wall Street and bankers that are all calling Putin and saying, hey, let's pretend to fight with each other for a week. All right. I used to think I wore a tinfoil hat on that until he made a meme coin. Then I'm like, yup. We would all do the same thing. We would all use our political influence. Like, let me tell you something's funny. When we talked about the stocks that were rallying, I didn't even bring up the best part. You know what stock was rallying? The funny 5 minutes before the announcement yesterday. This was the best part. I know. We talked about. Yes, you guys remember if y'all were in the stream. So remember yesterday before the announcement came out, like right here, about 6 minutes earlier, Resilience started picking up some unusual rallying. Like stocks were filling their gap in a 6-minute window, and it was Alibaba that was rallying 6 minutes early. Now, whether Trump has TikTok on his phone and they've hacked into him, or somebody got a phone call, whatever the case may be, maybe he got TikTok on his phone. You know what I'm saying? Trump's gonna go off the tariffs. Everyone buy Alibaba. Probably. But this is what happened yesterday. Just FYI. Look. Hold on. So we started seeing unusual volume in Alibaba. Now, of course, there was news and leading up into earnings and stuff. But look, 9:16 in the morning. At the same time resilience started moving, other stocks started going higher. Alibaba picked up a surge of volume, about 4 times its normal volume, 5 minutes early. And that volume started to grow rapidly. And the headline came out here. So we've seen insider trading before, and it looks just like this. So the headline was here at 21, and Alibaba started getting unusual volume flow 6 minutes ahead of time. See, at Rocket Skewer, this is what we're able to show you this kind of stuff. That's why you're here. So anywho, maybe he's got TikTok on his phone and they're listening in on his calls, who knows, but whatever. Or, there was something even more smart at hand, like, all right, China, you're next. Unless you want to make some money right now, help me out over here. I got something I'm doing over here. I'll let you make some money in the stock market. If you know what I mean. We play ball here. I'll make you some. And they're all like, all right, let's all make some money together. Politics is just like a let's all make money together club. I feel like it is, which is fun. As traders, it's our job to guess, right? But who knows? If anything, fam, how can I get on that group text? All right, that's all I want to know. Can I get in the circle, guys? I promise I won't bring green text to the group text. I have an iPhone. I won't ruin the experience for everybody. I can do emojis like normal people. That's so many jokes wrapped up into one. All right. Let's explain to people why Baba went up with that news, please. Saw Trump and Obama laughing. Oh, they're all friends. Yeah, no, they all, and it's good. I mean, I love it because my job as a trader is to figure out what's going on, and we got to kind of make sure we understand. All right, so let's talk about some stats. We got 13 minutes till market opens. Today, we've got JOLTS in about 42 minutes. JOLTS are going to be a really big mover of the market. I would recommend that you listen to that. The JOLTS are available job openings that are looking to be filled within the 30-day window. It's a healthier job market, or one happier job market. It's the supply of jobs. And now you need to compare that with supply and demand of jobs versus supply and demand of labor is your job market. And so JOLTS essentially are a 30-day window. It's essentially like a lubricated funnel. You can read what it is. So basically it means that to count as a JOLT, job openings, it has to be a job. This is a box. A company says we have a job and it needs to be filled, or if we fill it today, we can have the person working in 30 days. So it's a job that's available now. We got all the materials for it. It's not like a job that starts in a year. It's a job that starts within 30 days. And there's an active recruiter calling the available unemployed people or employed people saying, hey, he's got a job. He's trying to fill it within 30 days. You interested? Hey, it's pretty good. So you must have a job available. You must have someone pimping out for that job. I'm trying to pimp for that company to get you that job. And there needs to be a person available to fill that role. For a job to exist, there must be somebody to fill that job. There are dozens of us. Green phone master. You know, Arrested Development memes always make me LOL. How many never nudes do we have here? There are dozens of us. Dozens. All right. So right here, available job can be filled within 30 days. You have active recruiter trying to get the employee into the job, and you have employees to fill the job, meaning there's no reason for this job not to get filled. You got available supply, available demand. somebody making one aware of the other, and the job can start soon. That's what a JOLT is. It's active jobs available now. It's the sign of companies going on hiring sprees. JOLTs are going up for two reasons, and you interpret it differently based on the two reasons. JOLTs go up when people are creating new boxes, right? I have more of these jobs that we're trying to fill, and JOLTs will go up. Or JOLTs will go up on the other side of the table is if companies are axing the people in the job so they can replace them with better people. So it's like you get fired for, like, you know, sucking at your job. The JOLT will go up because they're looking to replace you within a month. So one of the things is job creation. One of these things is job replacement. In both these cases, the job is there. They just need to find somebody to get into it within 30 days. So one of these reduces the unemployment by one person. The other one just swaps you out with someone better. So you can solve the problem is which one is it is. Are we laying people off and replacing them? Or are we creating new jobs? You can't tell that from this alone. But Thursday, you get the jobless claims data. So continuing jobless claims are people that were laid off for non-performance reasons, looking for a job. And they're the ones filing for unemployment every week. And so if that number comes down, while JOLTs are going up, right? Then you know companies are creating jobs and hiring people at the same time. And you would call that a hiring spree or a job spree. So job creation, or sorry, if the number is going down, it means people are leaving the job pool, right? So it means companies are creating jobs. If the number is flat while the JOLTs are going up, they're probably just rotating. Might just be noise. So JOLTs can be firing or whatever, but it's been trending up lately, which I have been saying is good. This is what Powell's been saying as well. We are going up because companies are creating jobs. There's new markets start. I mean, this is a growth period. This is the soft landing we all wanted. So we're good. All right. What's up, guys? Hit that like button. Get ready to go in. Wow, there's a lot of you guys here. I love y'all. Starting very sharp on your day with Rocket Scooter. All right, so just letting you guys know, the very first day of the TradingView Leap competition, I'm not bad. I'm up 10% in the first day. But being a paper trading YOLO contest, it looks like we got some people that are 424% on their first day. How about them apples? So real trading contests aren't like this. But the funny part is with my $27,000 11% gain, I'm in 1,731st place. There are 40,000 people. There are literally 1,700 people that literally just went all in long before the news, before the Trump tweet. That is really funny. So we're going to have to inch our way forward. I'm going to hope that these people, you know, trade this out. There's a month and, you know, this kind of behavior, you're not going to, people that trade like that are going to continue to trade like that. But that's the target. I have to get about 10x or 4x my account to get to the top already. So we got to grind, boys. Oh, TradingView. Oh, that's kind of funny. Let's get ready to get going here. Under ideal conditions, we always said in like our last back test, in a normal market, under ideal conditions, 88% of days will stay within the band, 4% of days above, 8% of days below. I always long at the bottom band, no matter what. It just depends on how big I long. 414 and 400 are very close to there. S&P, kind of in a similar boat. Now, this could be one of those really nasty days, so just be careful. I have a weird feeling about today. We might get some phone calls, might get some rumors about tariffs. It's still on the table. China may say, LOL, just kidding, and then we rally. Just be cautious. I hope we get a little balance off of that. That's what I want to see today. But this filling the gap and tucking back down, not the best. This makes me feel like we're back down to here. So I'm going to be very cautious today. I do feel this could be on the table. So be careful on these breaks here. Statistically, I have to take that trade though, because it's the correct mentality to have. You got 4 minutes till market opens. Arrange my screen here. Greatly down, be likely, yeah. So we're gonna be opening flat. That's gonna be the one tragic part of today. We are having a flat market up. We're literally opening where we close. So you're gonna have a really tight redistribution zone. So resilience is gonna be everything to pivot the market up or down. Usually inside of that box, right, where you have the S&P has its box. Resilience is good for pivoting inside of the box, but when you have the market like flat from the previous day, resilience is good for creating rallies and creating sell-offs because the box itself just becomes like a resistance. And when you break through it, it doesn't take much. So all right, guys, what's up? Smash the like button, friends. Let's see if we can't get the numbers to... God, we had 400 and... How many people we had yesterday? 400 and something. We have a huge turnout yesterday. $431 peak concurrent people, you guys. Amazing. All right, we'll be having on Friday an Elite Trader Funding giveaway. There's a 30% off sale right there. So wait, over there they have, I think, a 60% off sale of Fast Tracks. Also, Tradeify has a 30% off on all things. Use our code. The bot's posting it. That's what I'm using. The bot says 50%. I need to change that. It's 30% as of yesterday. But I'm using Tradeify right now. I'm 1 week into trading with Tradeify, literally 1 weekend, and I've been crushing it. So let's wish me luck on this. Let me show you the trade journal real quick. I'll take a little picture of this. So this is like 1 week with them. I've got a 3.7 profit factor. That's your wins divided by your losses. Win rate about 76%, which is good, and I'm up about 33,000 on the first, right out the door, on the first week. So total 33,000. I get a payout on the 11th, which is my first payout that I'll get. I'm only $2,000 away from hitting my consistency, so it's a 10-day thing, and I've got like 4 days left. And I'm past the profit target on some of the accounts. And I just need to hit 20% consistency, which means all I need to make is a couple more thousand and I'm good. And I am good. Okay, we got about 3 minutes till market opens. Be cautious on this today. My goal is to long at the DD band at the bottom here. So, clear this up. Let's put this right here. 92% of days close above there in nice strong bull markets with everything looking good. That's a stat. In crazy markets, remember when you write these percentages on the chart, this was counted during our class. And ideal conditions, when I write this, it's considering ideal conditions. Ideal conditions means that all these lights are green or yellow. When any of those lights turn red, these probabilities aren't assumed to be as good. Now, we don't have enough data of like all the breaks and stuff because it's a rarer case, like the 8% of days. Like if MHP breaks, this is not going to be like 92%. In ideal conditions, these are the probabilities. So if this all stays stable, we would consider this ideal condition. This is a strong pivot. And our new module that we're going to make this year is the live backtest module, which will have real-time numbers on the chart that update in real time. That's going to be exciting. So like I can like, what are the last 6 months? You know, what are the last 6 months in ideal conditions? And it would like show the actual probability. That's what I want to make is really awesome. Consistency like that, you're profitable, but your win rate is lower. You hit the buy button too often. It takes time to be consistent. It takes patience, and that takes a lifetime to master. People will tell you I'm pretty like stoic and like focused as a trader. I've done it enough to know when to sit out. Like I have all my rules memorized. So it just takes time. It's okay if you don't have it yet. It just takes time. Okay, S&P kind of in a similar boat. If the ratio is greater than half, which yesterday it was fighting at half, so I'm not necessarily convinced. I'll long there with the medium trade. Or a normal trade, so we'll see what we get. Let's just tap it right at the bottom. Let me let it fall just a little bit. I'm going to be patient on this one. Now, we are opening flat, so be very careful on resilience because the market is not going to gap up or down. We're basically opening flat. So there's a really tight redistribution zone. Let's chill on this one. Let me get Thinkorswim. I'm really worried that we do have a big sell-off day. So I'm not in any hurry, guys, to plant a huge long on this. If the CD band breaks, the market's done for. So I'm going to let it tap. I'm not going to get in on this early. Let's let her touch, okay? We'll let her touch. No rush on this one. Oh, it's about 1 to 2 minutes. We'll have our numbers coming through. Right here on the edge. I feel like I just have a bad feeling about today. I don't know what it is. We're kind of flat at the open, to be honest. It's bearish, probably feeling because of the Chinese tariffs. But also know that like we did open flat. So the market's going to like... market's usually choppier at the open when you do open flat. As the stocks are trying to figure themselves out. Takes a little bit. We are right on the edge there, but let me give it a little bit more oomph. Let S&P pull back just a little bit. No real direction yet. Yeah, just let it do its thing. Liquidity map's coming through right now. Let's read what we got. Okay, so yeah, so like here's an interesting thought. Nasdaq has really strong pivots down here, so I can make a choice. I'll throw a couple contracts here at the band when we get there, and then we've got a pretty sizable dip. That's about 120 points on Nasdaq that I have really strong pivots on to long right back up if we break. And S&P is in the same boat. So guys, today, look. This is going to be one of those interesting days. I hate when you're flat, but res greater than 0 is a gap filler, right? Res less than 0 is a pullback to there. So basically, I can chase right here on this pullback and long, and that could be one thing to do. Which I don't know if I want to do that. Market's solid enough, so let's watch. 83 on DD band, which is great. It is a long setup from the bottom band, so this is a good... I'm not pushing it yet. So we'll let it do its thing. Bull market today, yes. Things are looking solid. Start right here. Go to next resistance. The problem is I don't really have a good gauge on that. I don't like days like this because... I think we break the lower band. And I don't know if it's just my spidey sense on this one. I'm not chasing this long up here. There's too much potential drawdown and bullishness below. So what I would love to see today, I want to see this. Not that I'm betting that it happens, but I'd love to see this fall to here. And that's the trade back up to like this breaks that band and comes right back to there. This will be 5,000 in every account. So I'm not chasing the long on this. I could technically speak with one contract by the open when we test it. So when it does have its first pullback, technically speaking, this setup is here. Oops. It's a good setup to take. The 1A trade off of open which is here, to go to next resistance there. QQQ is kind of in a similar boat, but I think we're resisting that monthly hedge pressure. So the question I have is, do I want to take it? So because you open flat, I don't consider this the same as most gap and goes. I usually, when markets are flat, I don't chase the gap and go. It's going to likely be choppy. So this is a possible trade with the small. These are all both small positions, S&P and Nasdaq futures. But what you see how strong it looks underneath. What I want more than anything, is for this to fall to here. And you guys see how all my supports are piling up right there. This is the ideal long. This is the big daddy long. Do I want to inch higher? No, I don't. Does everyone see what I'm saying? Plus, we have earnings this week. Today is Amazon, I believe, and Apple. I mean, Amazon and AMD today. Big earnings this week. Amazon, I think, or I got my Google today, Amazon Thursday. So the question is, do I want the small trade here, or do I let it pull back? Now, remember, there's a couple of dynamics we have going on here. So NASDAQ and S&P are in the same boat. Let's do NASDAQ today. Okay, there's no evidence market's pulling back. Everything's going higher. But what I'm saying is, if there's like more talks or announcements about the tariff, that's it. So couple rules of thumb. 92% of days closed below the lower band in ideal conditions. Check. Okay. 8% days below. Number 2. Bull long up is support at the open to next resistance. This is your next resistance. It is here. So that is the trade I would have taken. So this to here is the trade I would have taken, and I would have got out anyways. That's it. There's really no evidence further that the market's going to go higher. I don't usually have much on this one. And flat days, I let them chop around. Res is good, so we're on this side of the box. We are going to close pretty good today, I hope. That's the tiebreaker at the middle. We are below MHP in futures, so be careful. And then, of course, you have 80 and 90% days, respectively, blue and orange, is support. This to here is the ideal setup. If we get a dip, oh my God, I'm going to make so much money today. So, like, I get happy when I see these BLU setups are so good. They're so easy to play. Now, the question I always have is, do I chase the open? And I usually do, but when we open flat like this after big trading down on tariffs news, I keep telling myself, once the news comes out, can the market like sell really hard? And then I can have a dip to buy. So market's going up. Again, no fading, no selling, no evidence that it's going to turn around. But I don't really have a desire to do this because I still think the tariffs are going to come through and have some news on them. And we also have JOLTS in a little bit. So I'm expecting the JOLTS to create a move. Other key points is that 92% of days support right here. So I long at the green band every time. I'd love to see us touch the green band, and I also take a long from that. That's kind of what I wanted to see. But all things are pointing up today. Greater market. Bullish. Still bullish, man. Looking good. I'm in no trades right now. Greater market, super bullish. So, number one, DD greater than half means the stocks are bullish. That's good. I'm going to let the JOLTS come out before I make a decision. Number 2. SPY over MHP. Yep. No trades for me today, guys. Not yet. Monthly maps. We gotta go take a look at this one. So this is bullish. This is bullish. This is going to look 3 months in the future on SPY. And we are somewhat bullish and choppy, and it doesn't get back to normal until like the end of February. So we're still in for like a weird liquidating month. Let me zoom out and show you what this is. The bull side is kind of like choppy, and the bear side is sort of like deepening where we are. You see how as time goes by, we do enter bear territory in a week. So the market is not very bullish from here on the longer haul. It takes about 2 weeks for this market to get momentum from this. So we're still in that weird choppy mode of the market. So. All right, so this is what it is. Nice bull setup, but I don't have a really good entry on this. So sometimes I don't have a good entry, I don't take it. But those of you trying to short this with your fingers crossed, trying to fade this, good luck to you, because there's no evidence of downside. This, unfortunately, is not bullish. It's flat. So 2 out of 3, I'm still bullish, baby. Still bullish, baby. All right, you're getting ready to long the break. Happens about 4.85. Yeah, that's kind of like what we're looking at. Same stuff. SPY's in a similar boat. The ideal setup on SPY is down here as well. So SPY has ideal pushes from there to there, there, and there. Like this, I usually take when we're in the upper end of the band, and I'm usually trading to the upper band. But flat days, I don't take the push. That's the thing about flat days is the market is like right on the edge. It doesn't take much to move it. So in flat days, I never usually take the gap and go. Right? Res is greater than 0 and around the edge. I usually let it pivot the box, and we're not far from that support. It's only 20 points lower, which would make some good sense. We've got better supports down here. I don't know, my spidey sense is tingling that my alarm's about to go off. Woo! And then all of a sudden, market dips. Chinese have added 10% extra tax to whatever. And then, okay, good. Let's hit that dip and buy, right? Let's go one and done trade. Jason, baby. Who here is making a trade so far? By the way, friends, don't forget to hit that like button. We hit 400 people again today. Slowly becoming one of the biggest presences again. I used to be the second biggest futures streamer a long time ago before I built my trading platform and took a couple years off. Take a couple years off, people forget. We all went to Zoom, actually. So now that we're back on YouTube, we used to get thousands of people watch us a day. And this is before people traded futures. In the day of everyone trades futures now, some streamers have 5,000, sometimes 8,000, 10,000. Watch them. Like, there weren't that many traders to go around between myself and Trades by Matt, 7, 8 years ago, and maybe Pat. We each had 500 or less apiece. There weren't that many people that traded futures. We were the small subset of trading. Everybody traded penny stocks. So it's incredible to see future streamers with 10,000 or 1,000 or whatever. There's so many people trading futures now. It's incredible. So as we returned to YouTube and got serious about it late last year, we started putting a little bit of effort into YouTube a lot more. You guys are coming around supporting the show. I love it. We probably had 50 people to 100 people watching, and now we've got 400, and next month we'll have 1,000. We'll be back to our big glory. So you guys being here supporting the best futures stream there is makes me feel happy. Subscription was downgraded to basic for no reason. Can you reach out? Just reach out to tech support, and they'll work with you on that. If it was downgraded, it means you didn't pay your bill, or your card got declined or something. That happens. Or it got detached. That happens too. Or it expired or whatever. Sometimes that's usually what it is. For most people, your card expired. And then the site couldn't charge it, so it cancels your subscription. But either case, we'll get you right back in, dude. Go right to Slack, and we'll walk you through it. I know you're an old school member, buddy. 99% of the time, it's the card expired. 90%. 9%, there's a bug on the site, and 1% is the person didn't pay the bill or something, or they maxed out their credit card or whatever. Happens. It happens. JOLTS 50 minutes. You had your show as basic too. Try refreshing and logging in. They put out a patch to get rid of the basic app, so it could just be a bug. Log out and log back in and see what happens. You should be good. Might find it be a bug too. I don't think we rally from here. I don't feel it. For some reason, I just don't feel it. Now, all the signs are pointing up. I just don't have a good evidence of an entry today. other than right here or down here. I want these ideal setups more than anything. You know what I'm saying? You called it yesterday in queue to 1520, entered at the wrong place and got nervous about riding it up, pretty much exited at break even. I thought it didn't feel. I know. Well, I try not to feel trades, but I feel something today. I don't know what it is. Like I feel a tingle, and it's not like the chart is making me feel that way. It's, we've got earnings coming up. I feel like tariff news is about to come through the pipeline and give me that dip that I want. No, I saw somebody trading though. I was watching somebody on Twitter and they were they were trading on VWAP due to some technical analysis knucklehead. And they were they had a streaming show and there was two people talking to each other. And they're so it's stretching down really far. And I close this one out. Now, guys, this is just feel. I'm just doing this based on feel. I just felt like I need to close my trade. And I'm just like, oh my God, I can't believe one fucking person watches that person trade. Who says that? Oh, it just looks weird and it feels like it's time to get out. I don't know, man. Sometimes I just feel sad when I watch a movie. Yeah, that makes sense. Or, you feel bad when your little kiddo hurts themselves or scrapes. And yeah, I feel bad for that. But I don't know if you could make a career out of feeling stock candles. Well, guys, it just feels like time to get out. And I was like, rip everyone watching this person trade and your bank accounts. Good luck to you. When I'm in a trade, I don't feel anything. I know where I'm getting in. I know where I'm getting out the moment I lay money on the table. I got the whole thing planned out from start to finish. I ain't feeling shit. But right now, when I'm sitting out, see, when I feel anything, it's hesitation to act on the trade I do want. I want to get in here and I want to get out wherever. I always know what I want, but when I feel a certain thing, I choose to not take the trade. I don't exit my trade and enter. My risk and reward aren't defined by my feelings. Okay. Yes, I will shed a tear every time I watch the movie Rudy. And so will you. Don't lie. If you don't, you're a motherfucking liar. We all do. When he gets to play at the end and he gets to run the football, we all get so happy when he does it. But I don't feel the stock market. Hachiko, stop. Oh, so sad. You know what I'm saying? His body was small, but his heart was so big. That's me every time I watch that movie, man. When it comes to candles, it's not. I don't think I put my money. I don't put my money on my feelings, guys. That's not how I do it. Hachiko, how sad. Why did you have to do that? Rudy, you guys all know. Don't pretend. Don't pretend you don't get sad. You don't get a happy cry. Feeding the platform with more historical data. Well, Gamma, that is part of our project this year, and it requires a whole infrastructure change, unfortunately. When we originally designed our first app, it was designed to take the options data, create the walls or the zones and the hedge pressures, and then print them. We actually would just give you guys the numbers. These are the numbers, and that was it. And it was a tiny little app that we made, and then every single day we would refresh those numbers. It would just print numbers. And so when we made the platform, we built it off of that infrastructure, which just basically gives you that day's data, and that's it. We never stored historic data because you couldn't recall it. There wasn't a charting platform. So we built the charting platform. We have the same interface, which is sending that batch of data and then displaying it. So to recreate in our database the historic data that's happened over the years, we've collected years and years of raw data. We have to basically take that raw data and recreate those stock days and then populate a database with it and then create our front end to be able to pull historic data and have all the interfaces to control and do that. So to populate historic data, since all this stuff comes from a server, it is rigorously calculated one day at a time. It's not just like a technical indicator that you can just plug into the platform and then just calculates the values. Since it's all done on the server, it's a massive overhaul to create. We're calling the backtest project. So with historic data, we're going to be making a backtest module. That is the goal for 2025. That is the very next project we're going to work on. We're finally cleaning up the platform as it is now. We have the new education stuff, the new alerts. The DD band table is fixed. We have a few more odds and ends to recreate on this, and then we start what we call phase 3 of Rocket Scooter. So phase 3 goes into backtesting and AI assist modules and stuff. So we good. Do I still have any streams from 2020 on the YouTube channel? I possibly do. They're there. No, the streams are there, but I don't know if they're not hidden. Whenever we change the branding to Rocket Scooter just for branding purposes, we just took all the DTP stuff and then just hid it for no reason other than just there was a history of Rocket Scooter from the start, basically. But it's all still there. As a matter of fact, the 70-day win streak is all there. It's just all in private. That way, when our old videos show up, it's all part of engagement farming tricks. So when it comes down to people finding your and funneling your brand awareness, if you ever change your brand, you'll see like everyone does this on social media. When people change their brand, it's like the very first post is usually that brand. Because if you like find old videos that show up in the YouTube algo, you'll see like, hey guys, join Day Trader Paradise. Hey, check out and then people are like emailing, hey, how can I join DTP? I still get emails from people who watch a 2021 video of Trades by Matt asking about the extended, like Matt made a video about Rocket Scooter and he was like, we have a $35 extended trial. And even to this day, people are like, Trades by Matt code doesn't work. How do I get the $35? And I'm like, that is a 4-year-old video. So. Kyle, you're new to investing. So right now, you're watching me day trading. I'm day trading futures. I day trade right now with 2 prop firms on this stream. Well, actually 3. I'm trading a company called Tradeify. This is what you're watching right here. I'm trying to make to the 10-day payout window. And the last 6 days, I've made $33,000 in these funded accounts. And now you're watching me manage these funded accounts to pay out. So that's what you're seeing on the screen right here. I'm trading S&P and Nasdaq futures. Yeah. So, friends, smash that like button really quick. Everybody here, let's get the engagement up. Bottom left of the screen. Everyone click the thumbs up. Give us some love. We're going to wait. JOLTS are coming out pretty soon. Like I said, I'm going to let the market move first, and then I'm going to act. Everything's bullish from here, but I don't take that blast up when we open flat. Resilience is strong. We're sitting here. When JOLTS come out, I think the market's going to move, but somehow I just have a feeling. With the way the market's been moving lately, I have a feeling that we're not done hearing Trump news. It's not like I have a feeling market's coming down. I have a feeling that we're not done hearing the news today about tariffs. For whatever reason it is, I don't think we get a big rally today until there's news. And we have Google, Amazon earnings this week. So the earnings are likely going to be what move the market. And I'd like to see that this might actually have a holding pattern. And then it bumps on Google. So more like an experience-based feeling. Like I feel like the market is going to not move too high leading into Google earnings. But everything's bullish. So I'm not shorting this. I'm just hoping the news comes through and gives me a dip. That's all I care about. What has to change for me to become bearish? I have bear setups. That's it. So bear setups, baby, are very simple. If you guys take our courses, which you must do, it's $1 per class, literally as free as we can make it. You must take the courses because we give you little cheat sheets to answer those questions. Everything I do is documented and I execute to the T exactly what we do. So I have a cheat sheet that tells you when I bear the market. I've got 6 strong bull setups that I take, and I have 4 bear setups that I take. I become bearish. First of all, when all 3 of greater markets are bearish, I'm bearish. Now, 2 of them are bullish today. So If any one of these things are bullish, I'm bullish. But I still can short in a bull market. And really, the idea is that when I do short, I need these conditions. Below this orange line, which doesn't apply. Against the top of this gray box, which doesn't apply. Like I'm going to short in a bear zone and short on negative gamma. And short at the upper futures DD band. And these have conditions that require the stocks themselves to be bearish as well. And so today we don't have that because the stocks are extremely bullish today. So I don't normally short the market against the bullish stocks. It takes a lot for me to do it. So when I see people trying to fade the market, it's just silly to me. The stocks are extremely bullish. The market's going to try to go up. What I'm waiting for is news to kick us lower so I can buy a better dip. So in Trump and tariff markets, I get in the habit of not chasing longs a lot. We know that the volatility comes. And so I just wait. And when I get that, dip. Okay. Yeah, and as Krim said, most bearish days will start with like a break of something, a break of zone, or a break of the band. And so today everything's bullish. I'm not touching the market. I haven't done anything yet. I want to be bullish, but I don't have a really good entry. The market just went like this and I didn't get the pullback I wanted. This guy right here didn't happen. So when I don't get the pullback I wanted, I don't chase and say, I'm going to forget this. I'm going to get in on this or whatever. I just kind of wait. You guys made some money, news in 5. Yeah, so news in 5, I'd be completely flat going into JOLTS news if I were in a trade. Yeah. So, all right. So for that particular reason, like I only short whenever it needs to be short. Like I don't fade a bull market. So in bull markets like this, I'm waiting for dips to buy. I wrote the word ideal here because if the market decides to collapse on tariff news or whatever, I love to have all my money in my pocket and grab the dip that's strong, right? Now, that's really far from here. I don't think we get it, but it's still a possible setup. You made 20 bucks. Consistent investor lives up to his namesake. All you got to do is make consistent living. Killing it, bro. If it goes fast, MHP will be a catalyst to sit out. That's also true. Now, if it doesn't fall there on the news and just moseys its way down there, then maybe it couldn't trigger a catalyst. But you're absolutely right on that. That's a little far away for not considering it to be a catalyst. You are correct. Haven't touched it yet. Well, part of my strategy, it does support my win rate, which I always tell you guys. My win rate is 70 to 80%. And people are like, I've never heard of that before. And I go, well, no, that's what it is. It literally is that. I am the one of the few people out there that has an actual edge. I have a strategy that works a high probability of the time. And again, the proof is when we tell you that these are percent that we bounce there, when I execute near or below that, it shows you the probability of those is really high. Quantifiably, 80, 90% balance, 92% balance, I can maintain an 80% win rate, but I don't trade a lot. So the difference between maybe you and me is I'm the kind of person that has an average win to loss trade that are roughly the same size. My win might be 2,000, my loss might be 2,000. A lot of my trades are roughly like 1 to 1 or 1.5 to 1, but I win more than I lose, and that's how I usually bank on my trade. The fact that I keep my win to loss very low is a very low probability of a blow up. So I can win 4 trades and then lose 1 if I keep them the same size. That's different. It's a whole different style of trading than the other person who's a 30% winner and they try to win big to overcome the many losses they have. But that's because most people trade off the feelings of the VWAP. I just feel like this is a good place to get out. Well, that's why your win rate's 30%. You got to gamble and be in the market a lot longer to get those big runs to offset your losses. My style of trading is actually consistent trading, to win more than you lose and keep your wins and losses relatively close to each other. So you're going to make a bet that will be at least 1,000 concurrent viewers. That'd be awesome. So back when I did my million challenge in 2020, we'd have over 1,000 people watching the show at the peak of that. And The goal was I told people I would take a very small amount. I'd start off with, so this was like, I'd start off with half the margin requirement, which ended up being $6,700. And I said, I'd only trade S&P. That's all I did, S&P. And I will trade it to $1 million live on stream. And 8 months, and again, I just grinded it out. And 8 months later on that stream, the first 70 days, I didn't lose a day. Literally the first 70 days, I had 100%, like all days were green. I sat out maybe like 15 days and the rest of them were green. It was incredible. And that grew the stream like crazy. People were coming at like day 10 and day 20 to like throw a wrench and troll and talk. Okay, here we go. Jolts are out. Talk shit and whatever. But after the 20th day and the 30th day, it became a phenomenon because not too many people were trading futures, but everybody that traded futures was watching our stream just to see when I was going to lose. And so some people here were here that long, but it was a 70-day win streak right out the door. And then I took the first loss on stream, but kept going. And about 8 months later, we were really close to, I think, like 95,000 was the peak of that account when I was on YouTube. But then at the same time, we built Rocket Scooter. We started building Rocket Scooter, the first app. And so when I built the app, we went back to Zoom so that we can like beta test the app and release it. So I continued trading in Zoom instead of YouTube. And then we took like 2 years off of YouTube. And then we finally came back. The app turned into a platform 2 years after that. And then the platform, late 2022, we kind of came back to YouTube, but we were still mostly in Zoom. And then just about 3 months ago, we closed Zoom down and everybody came to YouTube. So now we're back to growing. We used to be the second biggest future streamer back in the day. Way back in the day. And then now prop firms are huge. So everybody trades futures, which is amazing. So we're back to growing. So appreciate you guys supporting the stream. We'll have thousands of people watching us again, like we used to. Back over the open again. Like I said, nice, good bull market. I don't hate it. Jolts came out. Let's see what the market looks like. Let's analyze that really quick for you guys. I appreciate that. I do feel, ooh. So that usually can mean jobs are getting filled. That's a tick down. It's not showing on the graph, but 7.6 is still decent, but it is a tick down, which usually means people got hired. Jobs, like the creation spree is over and people are getting hired. Tomorrow or Thursday, when we get the jobs data, what you're going to look for are the initial jobless claims and the continuing jobless claims to see if people are still filling those roles or not. Companies either created the jobs and took them away or they filled them up. And if you look at the continuing jobless claims, if this is ticking down, it means those jobs are getting filled. So usually once companies will create the jobs and then within a month they'll fill the jobs, you'll start to see unemployed people stop filing for unemployment. And that's the trend. I see that Thursday morning for the data. DD ratio took a little bit of a hit. Yeah, let's look at the platform here. Slight bit of a hit, about 80 to about 60. And trading a little bit lower, but it's still doing okay. But that is definitely interesting to see. So not taking this long. Honestly, if I were long to here, I would close out with all my profit and feel lucky that I got what I got. Well, thank you guys. Everybody that hits the like button, the stream gets shown to a new person. So thank you for supporting us. I want to be at 1,000 people within 4 to 5 weeks. Tell all your friends what we do here. I'm the guy that draws on his screen. I'm the guy that has this 80% win rate. I don't trade a lot, but when I do, I hit it hard and I hit it good. We have fun. People are always like, how can you have 70, 80%? Doesn't make sense. Well, it's a lot of people do. It's not because I'm trading all the time. Anybody that trades all the time, up and down, long and shorting, guessing the market, won't have that. That's why people don't have that. That's why people you watch don't have anything close to that. But I have a gimmick that I exploit. I exploit only the gimmick. There's only certain things I do. And it works most of the time. This is the gimmick. If you take our classes, $1 will get you this. That's it. We don't even charge for it for the most part. It's $1 to keep the bots out. And you take it seriously if it's only $1. $1 a class. These are the only setups I hit hard. They're lines on my chart. So orange long, I hit it hard. Blue long, I hit it hard. Or hit it. I only short under certain conditions, and that's way down here. So this is the range I'm going to be shorting at. And I'm not even close to being bearish. Market's extremely bullish today. So I've got my strong bull setups. But unfortunately, I don't have any of the dips, so I don't take it. This was the closest one, but we never tapped it. So as you see, like I'm not chasing the long, and you'll see me not do that a lot. You'll see me spend a lot of time just kind of chilling, but I wait for my setup. And so the best part about what we do is that it's an overlay to what you do. It's kind of like cherry picking some high probability volume setups on top of what it is you do. You may have a momentum strategy that may be long in you right now. I don't. It's not my strategy. But for me, it's like, you know where the limits are of the move and where the high volume is going to be, then you can overlay on your other thing is extra confluence. That's kind of like what we do here. All right, so nice little upper move. It's just going straight up to that DD band. Everything's bullish today. Nothing looks bad. I almost pushed the button and open off of that DD float though, that 92%. I just hit myself or not, but I was going to let it fall first. Well, we'll see. The uptrend is looking good, but the stretch from 60 to 690 is going to be a little risky from here. You're out long for the day. I think we're in a good spot. Really good spot. Green band short? No. The short on the green band is the bottom, is the top green band. And I only short this if this ratio is less than half, if the stocks are bearish themselves. So I never bet against the bull market. That's one thing you'll learn. 90% of my trades are long in all environments too, like self environments, everything. It's crazy to watch. When markets are crashing, I always find that perfect little dip to buy. And those high probability setups are high probable every time. So today, like, here's an example. Each one of these is a trade that I'm drawing on here. This is my favorite trade. This used to be my favorite trade. This is my favorite. This is my second favorite now, right there to the middle. This is the highest probability set. Bull zone, bounce. So these are all really good setups. Ideal would be from there to there. That's the ideal big move. If we got the open, I don't think it's going to happen. 80-90% of days will close. 80% will close above blue. 90% will close above orange. So whatever dip we get, I'm betting that we hold that. But in all honesty, it just doesn't seem like a good trading day today. All right, did y'all bank today? Did y'all get lucky on that long? If I would have taken a 40-point rip or a 200 or 150-point rip on NASDAQ today, I would be clean out of my trades. That's really awesome. You guys are killing it. Who made trades today? Who has bigger balls than me? Your bank is Palantir. There we go. Dude, fucking Palantir today, man. Yeah, or yesterday. Insane. All the Palantir kids from last year were just like so happy to finally get their payout. I'm happy for it. I knew a bunch of people that were upside down on that for like 2 years. So good. Very good, man, to see that stuff moving. You guys banking today? $20 MES, good. So, all right, for me, I wait for the setups, right? I need to get the good setup that I want to get. S&P at a resistance here. That's not a bad setup. You guys did good today. SPY. Not every day is a good run day. So today on the S&P, oops. These are all good setups. Today, I wanted to see that NASDAQ bounce there, and I missed it. But I usually trade 2 next resistance. This is next resistance, so this is the end. If I were long, this would be the end of the day for S&P and all my trades. You agree with me that being long gives a good edge when VVIX is under 120? Yeah, our rules a little even tighter on VVIX. We have confidence closer to like less than 100. But less than 120, long does start to take an advantage, I agree. The market, well, at least whenever you're trader funding programs where your volatility is important to understand because you take drawdowns and you usually have daily trailing drawdowns to go with you. Trading above 120 or even above 100 is enough to squeeze you out of your positions just because of the volatility. So you nailed it, Gamma. I completely agree. So my part of my trading strategy, has optimal setup with VVIX less than 100. VVIX less than 120, also not bad. Above 100 is our caution point on that. So what he's saying, he or she is saying, is VVIX is the volatility of the VIX indicator. It talks about how explosive the VIX itself would be, which comes like an exponential widening of the stock market. And in the mode of tariffs, we are in that cautionary zone. So I know because VVIX is above 100, I don't usually chase long setups. I usually allow myself to know that volatility is present. The market has the ability to have explosive volatility. Sensitivity to news is a way to think of it. Above 100 VVIX, you're sensitive to news. Trump could tweet one thing and the candle falls, 60, 80 points in the S&P within, 30 minutes. And so because that sensitivity is there, I don't like to inch forward in a trade because the news just zaps you. I like to wait for the dip and take it. And I've traded Trump for 4 years, very successfully, mind you, by not chasing green candles when you know the buzz is he can speak at any time. And the market is definitely positioned for he could speak at any time. VIX futures are still, kind of at a standstill. We have a key spot that we look at. VIX is in contango from, the forward curve is certainly showing that. This triple B level, which is one of our break points, we talk about that contango midpoint. When you're above there, the market tends to have a little bit more sensitivity to news as well. So VIX futures and VVIX aren't giving me any indication that the market doesn't have the ability to have like explosive downside if there's good news. So what I normally do is I wait for the news or wait for some reason for it to come down and get a dip, and I buy dips. I don't get used to chasing trends when it's a market. 675 resistance. Yep. Probably. This is an incredible move today. There is no pullback. Hitting that upper band. That's incredible. So honestly, completely surprising to me. A little bit of short squeeze there too. I didn't take any of this, even though all signs pointed up. I just didn't get a good entry. Like all morning, I just waited for it to bounce there, or on NASDAQ. I think S&P did, and I just missed it. Oh, well. I do need to flip these accounts to make them count as a trading day, though. Good day, guy. So that's why one thing I don't short bull markets, right? I just let the markets do whatever. And that's it. I don't short a lot of the time. I tend to stay, I can find dips in any market for the most part. It's very rare that I will short, and I need a bear market to short. And today, our greater market, two of the three things are bullish. I'm bullish with any of these things are bullish. Any reason to be bullish, I'll take it. And the probability is there. I mean, this is the art form of trading with 80% win rate. It's to have a specific setup that you do and exploit it. And that's all I do. I wait for it. I get most of my trades right. I win trading competitions with that mentality. If you guys never know, I like to compete in trading contests, but I'm very accurate. And I wait and I strike. The S&P down here. We're pretty far from the one on the S&P. All right, let's do, like I said, I don't chase greens when news can happen. We wait. So today, like the ideal, the best setups are here to there and there to there. These are all really strong setups. So all day I was waiting for my strong pivots along off of. These little bumps like this, I usually don't chase without, on flat days as well. I usually don't trust the bounces on these flat days because the market can swing very rapidly both ways whenever you open flat. So I need like definitive resilience being good and then breaking above. But like I told you guys, when pre-market was that when you do open flat, you don't have much of a box, the market just pivots one way or the other very rapidly based on resilience. So it doesn't like hover the middle. It usually picks a direction when you open flat. This is what you have to know most of the time. When markets open flat and res is positive, it usually just takes off. Market's open flat, res is negative, it usually just dips. And so when we had that big positive bump, it just kind of took off. But like I said, I'm not chasing the high. This is clearly a short squeeze, not really a long rally. You see shorts covering as there's a parabolic curvature to this market. When you see it moving like that without a pullback, this is 100% shorts covering, right? It's markets pushing higher, which squeezes people, which squeezes people. Shorts covering. It's not people buying on news for the most part. It's people getting squeezed out of a trade because it's moving faster as time goes on. As it goes higher, more people bump and more people bump and more people bump. Y'all see that? So a cool thing you learned today, if you didn't learn anything before, is that when shorts are covering, it squeezes like this. When longs are covering, i.e. longs are dumping their shit, it falls like this. If people are entering on news, it goes like this. So people squeezing other people move like that. People buying on news, it moves fast at the start and then slows down. This is speeding up. So this is just bumping into traders getting squeezed. So the shape is very important to understand what's going on. It's not like I'm missing out on some good news or some good rally. The market just carrying on a short squeeze. And again, while all signs are pointing bullish, it's not necessarily fueled by any kind of news or anything today. Where do you get the numbers for the estimated hedge pressure lines, Jonathan Rose, in the Discord? There's a channel in the Discord that our bot will create the numbers every afternoon, and then I post them in here. And this channel called Futures Hedge Pressure Dynamic, they're here. Those orange ones. So, Futures Dynamic. It's in the Bots and Extra Tools channel. Ooh, 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 ooh. Who here uses Tradeify? Y'all liking the experience there? I'm really digging it. I'm loving the service. I had a really good time using it. The straight to funded is by far my favorite thing I've used. I'm using Elite Trader Funding. I'm in a live account with them, and I'm using Tradeify straight to funded. I love it. So I now have a code for Take Profit, you guys. So does anybody here use Take Profit? I just got to prove for them to do a code for those guys. By the way. I also have my funded futures now. I finally got, hold on, let me give you guys the code. Let me see, they sent me an email. Hold on. Where the heck is it? Hold on, guys. Let's see what we have. Where is my affiliate code and link? Hold on. Okay. It says you already have an affiliate code and link. Okay. Well, where do I get it from? Do they have like a dashboard here or anything? Hold on. Log in. Okay. I have no idea what my code and link is. I have no way to see it. The menu doesn't have like wallet rewards. Is that it? No. Calendar, credit bank, change password, personal info. I can't see where, I don't even know where my... I don't know what the code is. They don't have like a dashboard. What the heck? Unless I'm in the... Okay, Take Profit Trader. Log in. There's a button that says Become an Affiliate. And I click it. It's like you already have an affiliate code and link. But it does not displaying it anywhere. All right, let's see what they emailed me really quick. Fortunately, I just missed today's like kind of crummy because there wasn't like a good. There wasn't a good entry. But hang tight, guys. We're gonna do some education today. All right. Hold on. I am curious. What is my link code? And how can I find that on the site? All right. Oh wow, I kind of overlooked this. Here's your referral link. Oh, okay. Oh, there's like its own affiliate page. Okay, it's just hard to navigate to it. All right, here we go, guys. Here it is. Here, go here. Code Rocket Scooter. And I think it's 50% off with Take Profit. All right, cool. They actually, the head of affiliate partnerships wants to have a meeting with me. Okay. 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 Take Profit Trader. Is it one word or two words? One word. Take Profit. Is it trader or trading? Take Profit Trader. Trader. Okay. Where did that go? Hold on, guys. Give me the code really quick. You guys help me get the word out. If you guys like what it is we do here, tell all your friends, you know, like honestly, we're growing the stream again. We're gonna be in the top 3 this year. We're getting back to it. I'm super excited. Let's see what they want to talk about. Very cool. Well, let's have a chat. $50% off right now. Well, that's good. The whole business model of prop firms is based on the small success rate among futures traders. I mean, it's let me broaden your definition of that. That's the business model of a casino. And it's like the same business model. It's a game people play, try to make money, and the house clearly has an advantage. You must have enough losers to pay your overhead and make a profit, so that the winners get paid out. It's certainly a casino's business model. What's up, Stereo? What's up, man? Trump call with Rashid is scheduled to happen soon. Like I said, my spidey sense is like there's going to be some kind of something going on with Trump, with China. These are just people. This is just shorts getting out of the way before something. I don't believe the market's going to sell off. I don't believe it's a bear market. If I were long and got this lucky push, I would be fully out of the market by now. I wouldn't bet on a rally. But I think the idea that tariffs are still front and center, my job is to be kind of flat on the market and let the dip hit the spot I want to hit on. So they talk about more tariffs. The market's going to dump pretty quick. So we'll see. I'm looking for long setups. This is good. There's no short setups from here, so it's kind of chilling on this today. No, I haven't got paid. I haven't got paid by Apex yet, but I'm not focusing on trading them right now. I'm focusing on, because I can't open like multiple Tradeovate instances, so I'm gonna jump back on my Apex probably after so I'm doing Tradeify next. Sorry, Tradeify now, and then Fun and Family next, and then I'm gonna try them for a little bit. And so I'm trying to get like a payout. Apex is hardest to get payout from. So I got a payout from ETF, and then I'm only really trading one at a time. So I'm not doing like all of them. Not yet, not with Apex. So not doing them yet. So I'm worried because to me, I've lost motivation with Apex of all the stories I've heard. And when Minx and I started our podcast, and you know, I told Brett, he was like, "Yeah, man, you should trade our stuff." He's like, "We're the best. We got the best setup." And I was like, "All right, so I'll try it out." And I love it. Like he wasn't wrong. I actually really enjoy their service. ETF, love their service. Funded, I'm gonna try them. Funded Family, and so I'm gonna try each one of them just to see if it works. But you guys have the link for Take Profit Trader. I posted it, code Rocket Scooter. So 50% off right now with those guys. And yeah, so I'd be curious. I'll set up a meeting with they actually were like, well, one of the first things was when I applied, they already knew who I was. It was almost like when I applied, it took a while because they were actually reached out to me through a different channel. And they were like, "Hey, Matt, this is so-and-so, you know, from Take Profit. You know, we're a big fan of your work. We just were curious, is this you applying? Because somebody's applying as you, but we weren't sure this was you." And I was like, "Oh, that's cool." So it seemed like they already knew who I was, and something about the application didn't make them think it was. They were just checking to make sure it was me. So they reached out on a different channel, which is kind of cool. And they were like, "This is you, right?" And I was like, "Oh yeah, that's me." And they're like, "Oh, great. Yeah, we'd love to have you on board." So that's why it took a little bit. It was kind of nice. It was kind of nice. They were looking out. They already knew who I was, and they were making sure that somebody wasn't pretending to be me to sign up. Should I put the attention on top? Oh shit, I forgot about Top Step. See, I keep forgetting. Okay, so after I get my Tradeify payout, should I focus on Top Step? I should. You know, I have two friends that trade on that Top Step show, and one of them said, "We'd love to get you on that show. You just start making some money with Top Step, and we'd love to pull you on the show every once in a while." Oh, okay, that'd be cool. So maybe we should focus on doing the Top Step. The problem is what I actually was talking to iDoc this weekend. I have my whole second trading setup here, and what I want to do is set up this area to trade all my other stuff, because like you need like different instances of things. So I need more space. These screens are all taken up just for the stream. I can do like one instance of Tradeovate and maybe a Top Step. I can do like two things in this computer setup here. I need more screens to manage more trading accounts. So what I'm gonna do is maybe I'll put something over here. Never traded anyone else with Top Step. Everyone says you can open multiple Tradeovates at once. You had trouble with doing that. You can. You can open multiple TradeAwaits at once, but TradeAwait's very brutal on your resources. You can, but technically you shouldn't. Opening 20 DOMs of TradeAwait, it's like it locks up almost all of my CPU. And I have a fast computer. Did I have breakfast? I had Taco Bell for breakfast. Love the education. Oh, thanks, man. All right, so here, like I said, they got the phone call coming up. I think that we're gonna get the woo. We get a nice little tariffs thing. I've got my long pivots from here. I got my long pivots from here, and I got my long pivot maybe from here. Normal trade, small trade. So if I get those dips, I'm gonna take it. Like I said, this is just like a nice little fluke. I did miss out on this, but I didn't get a good entry. So I'm just kind of waiting on this to turn out to something better. QQQ every single time. Yes, sir. You know it, Keegs. Welcome to the group. Keegs finally joining, by the way. Jumping on the courses. Glad to have you. What's my PC setup? Oh, dude. All right, let me show you guys. I get so happy when people ask. Well, if you don't... Oh, wait. I have a video. I made a video on Twitter. Where did I put it? Let me show you. I get so excited. People ask. Well, because you asked. So, it's kind of like if you ask the eye doc about eyeglasses, she gets all excited. Ooh, what would you like to know? Contacts? By all means, allow me. So here's my setup. I'll show you. I've got many posts about it, but this is me building it in the new room. Actually, let me show you guys. Hold on. Dude, that's a banger song too. And I got this whole setup off to the side over here. Then I want to get more stuff up there so I can get like a second trading setup with more screens, more monitors. But I just have basically one monitor and a laptop sitting here. So this is what controls this. This is like gaming, audio, video mastering, and second trading setup. So I can turn to the left and trade. This is what I got here. All my stuff. This is me building the office. This is what it used to look like at the old place. I kind of went for more of a money theme, less of a neon theme. This is me building everything. Just got a new house a couple months ago. Monitor setups, cable management. The audio panels, everything. Oh yeah, it's nice. It's really nice. I'm really excited. So let me show you the computer I have. This is the best part. Hold up. I get a little proud of my computer here. I have a better computer than anybody you know. That's for sure. But I'm like a hyper enthusiast when it comes to computers. I go overboard. It's part of the process. So... This is so I do ridiculous things when I build computers. This is one of the things I built. So this is my streaming computer. So in this box, I've got two computers in one. I got this guy is the main computer, and this guy is the second computer. And this is one box with two in it. So this computer crunches everything. I've got two NVIDIA cards that power all the monitors, and you can game on this thing. I run custom cable sleeving, so I like redo all my cables just to give it a cool pattern. Custom water cooling. I bent all the twos myself. How's the heat? It's good. It gets hot in here, but yeah, it's this ultra cool computer. It doesn't get hot in the computer at all. Idle temps are like 45, and this is a 1200 series NVIDIA, which are run hot. But I got the special back plate for the series, so
that makes it like 10 degrees cooler. But yeah, basically here, and this is a streaming computer. So it has a 4K capture card that takes a video input and then just renders the stream and broadcasts like the stream that you see. So gaming computer, streaming computer, all in the same box. And I have it all. I hear pickle. I have it all in the same loop. So I've got 2 radiators, one there, one back there behind this reservoir, and then a pump reservoir combo. All EK blocks, velocity, you know, I got all the good stuff. EK is the best. And I got like the black fittings. It took me 2 years to collect everything to build this computer because I was collecting it during COVID. So I had to buy everything piece by piece by piece when you couldn't get anything. You couldn't get anything at the time. So yeah, hard tubing. Why Intel? I know, right? Well, I'm an Intel fanboy because I've always had success with overclocking Intel computers. I've always been really good at it. And so I never swapped to a long time ago. I was an AMD guy, but like in high school. But then like Intel came out with some very easily overclockable processors, and then I just got hooked on it. And then I got used to the process, so I've always stayed with Intel. AMD dominates at CPU and NVIDIA. Well, I mean, in general, out of the box, yeah. But when it comes to overclocking, my Intels are very clean overclocks. I just have to relearn the whole AMD thing. My desk, the desk on the left, hold up. So I got 2 desks. This desk is from Crate and Barrel. I wanted like a sturdy, like thin framed, but like thick wood desk. Crate and Barrel. It's probably like $4 grand. Worth every penny. I've had this thing since I started trading. It's pretty much that old. I've had it forever, and it's nice. The other desk that I have, the second desk, is a Secret Lab Magnus Pro, which is like the really nice sit-stand desk for gamers. So that desk is really clean. And I just got that as my Christmas present to myself. It's a little bigger for you guys to see. This one's tight. It's got like cable management trays built in. It's perfectly built for like a clean setup and look. And it's adjustable. You can set different profiles if you want to sit or stand. They have different heights, so like iDoc can sit there and work while I'm working. And she can set the desk to like a different height or whatever. But very, very nice. Is that the computer that said NASA would want to borrow? Yeah. Well, you know, it's got like it's all, you have to get like custom things. Like there's custom power supply that powers 2 computers in one box. There's like, you can't just like easily find all the pieces to put 2 PCs in a box. Nowadays it's a little bit more common. A lot of people, there's a lot more availability, but like 2019 and 2020, it was like a hyper enthusiast thing to buy the special components to get like 2 computers in one case. It wasn't easy to do. But it saves a lot of space. A lot of people that are gamers will have like a gaming computer and a streaming computer. And now it's a little more mainstream for high-end production companies to do 2 computers in a box. It's a little bit easier. Ninth gen is fine. I like the new Ryzen chips though. Yeah. AMD has been dominating like the last 2. Yeah. So this is a 12900. So I built this in 2022. I got the components. I started saving them from 2020. And midway, when I started buying this stuff, it was the 11th gen. So 12th gen came out, and I returned half of the components and rebought all new stuff for 12th gen. So at the time, it was 12th gen when it was state of the art. Last 2 or 3 gens, AMD's come out pretty clean. But I'm not in the market to build a new computer. This computer will last for like 6 or 7 years without needing an update. This is just for streaming and trading. So this computer won't need any update. I've got this guy over here, which is about to become my 4K gaming setup. So when I get my next computer over here, I'm going to get 5000 series NVIDIA card. I'm going to get all new stuff. I'm gonna get. I don't know if I want to get a computer other than like a really fast laptop. So I might get a 5090 Alienware type laptop. So I can have like my fastest gaming machine, audio video machine over there. I added all my videos there, do all my content there with that big ass monitor. It's really nice. Put the curved monitor over there, please. Yeah. I got that. Well, I gave the curved monitor to the girlfriend. This one I have is a is the 32-inch WOLED Asus, the big dog. You build a 9900K. 9900K was my favorite processor for so long. It was such a good overclocker. I had that thing running, I think at like 4.5, and it was ultra cool. Like it was really nice. I had that in my machine for many years before I went up to the 11. I went from that to a 10 and then a 10 to a 12. So when I started streaming, I guess like probably 2016, 2017, I think that was the rig I had around then. Your case is massive to fit the 4090. It's kind of absurd. Oh, it does fit or doesn't fit. So I need to read Phoenix to talk about performance and the security loss by choosing Intel. Unless, especially when using your machine for banking or in this case stock. I mean, I'm using the machine for trading. I don't think I'm exposing much. But yeah, that is something worth reading. Threadripper for workstations. I don't get as much of Threadripper. Yeah, Threadripper is the way to go if you're using it for. And again, I don't need that either. That's too much overkill for me. I want to see Trump move the market around. Your Alienware laptop keyboard always cuts out whenever a window update hits. No way. When I say Alienware, I mean Alienware-ish. I don't necessarily buy the Alienware brand laptop. I usually buy that same thing, but usually I go MSI or something. Same component, slightly cheaper. Alienwares are also known to be heavy, so I don't like heavy laptops. I've never looked at Falcon computers. Is it a laptop or is it a PC? AMD has designed Zen 4 such the performance is not affected by its mitigations. Okay. But man, it will overheat. Wait, which one overheats? What is this PA? We go up and do nothing. No, there is no good long setup. What you'll notice is that I don't take every move in the market and feel the itch to make a trade. I got to preserve my win rate. I'm trying to beat a trader funding program. So there is no good entry from here. I've got no good pivots to play on. That's unfortunately what we are. Hold on one second. I'll be right back. I'm going to take a quick restroom break. All right, I'm back. Restroom super quick right around the corner. Not every trade is worth taking. Right now, I'm not super enthusiastic about taking every trade or a lot of the trades out there. Oh, the market's doing nothing. Oh, yeah. Okay. My bad. I was like, not every trade I do take. Like, this one just didn't give good entries, and we just walked, like, basically just straight up without a bounce. A lot of times this is just, I mean, I was waiting for a better dip. You know, they got the phone call. Trump's talking about tariffs and stuff. So it's good to kind of just, like, not be overexposed in an environment like that. I think I'm being smart by waiting to see what happens. The bear trap will come. I think so. Let's do some impact lines really quick. Let's get the numbers while we're waiting. Do we have any? You're right there. $21,468. Let me just double check. Oh, actually, hold on. Here's the big volatility. 21,471. Oh, that is right here. Oh, that's nice. That is literally right there. Okay, let's do S&P really quick. VBIX is still high. Markets can be extremely sensitive to news. This is not the day for me to go and try to be a hero. We're going to wait. I want Trump to say something with the Chinese president. We got to be smart, guys. Y'all know the drill. Anybody out there gambling today is just gambling. I got to be smart, though. Nope. So the S&P is roughly 60.35. So right here, this is the impact level that I think is going to be the support if we do test something, which is roughly about 599, give or take. That's the test pivot on news. Yeah, about the same mark. Explore the vibe. Okay, cool. DD band is 21,712 decision point. It is. It definitely is today. So the thing is that right here, I don't. This is not the place that I really want to be engaged in a trade from. Market like this, just squeezing people out of the way. We've got Amazon earnings coming up. We've got Google earnings coming up. Google's today, and so the market's likely just spanning the range, and people are gonna get out of the way. I really do feel like today is going to be a surprise day. I don't think we're gonna have a predictable move. It just doesn't have that kind of short squeeze at the open. Amazon earnings, Google earnings, there's a lot, and then we're kind of on the fence here of what's going to go on with Chinese tariffs. They're going to get on the phone, I think, as somebody said today, and we'll see what they talk about. That's kind of like where we are. What are they going to talk about? So somebody says bear travel come, years of experience. How often does like today happen where it doesn't take a strong pivot point? I mean, I would say maybe once every 2 weeks or so, there'll be a nice bull run that just doesn't get a strong pivot. And it's not because it's a bull run, it's because it's a short squeeze. It's not something that was hyper predictable. While all of our indicators did point up, I still have to get a good entry when I take the trade. My thing is not to chase a long candle or break out the momentum. I need strong pivots. I got to keep my win rate high, and I wait for a bounce. Now, I did miss the bounce today because I wasn't looking. That was a mistake I made. The S&P clearly did bounce. I just was not paying attention. And that happens when you stream. So I missed it because I was watching NASDAQ. NASDAQ was going higher, and I normally will have S&P on the screen at the start also. So that was unfortunate. So today's setup, usually this is the move. Here to here to here, and then that's the high. So 526 is a good setup for today. Illiquidity pocket, hits bear zone, pulls back, but a second tap there, breaks through to 526, and then pulls back. So the high is likely here in NASDAQ today. We have like that, we call it every single trade setup. Every single time you hit bear zone with ratio of DD higher than half, it goes straight through the bull. So that kind of lines up with the DD band at the top. Not to say that we break and keep going, but this likely ends up here before it turns around. So I don't think we're selling off today, but I don't think we're rallying past 720. Does the platform work for overnight sessions? Oh, absolutely. That's all I use for overnight is Rocket Scooter stuff. Get him, baby. Get him, baby. Bulls are like it's pulled fast on the bears. This is just shorts covering, getting out of the way of potential working out the news with Chinese president. Obviously, they're going to get on the phone at some point today. We're hoping they get on the phone and something happens. Magic happens. So 473 is that retracement target for NASDAQ. For whatever it is, the way that it's moving has me believe that we're going to take a really nasty dip. It feels like a short squeeze, and with so much going on, it's just people getting out of the way. Not that we're going to sell off today, but like that this isn't the rally to keep rallying, I don't think. I feel like this is something that ends up around here. Whether it's earnings or news or something, it just has that. This is short covering and continuation of this, but this is the kind of the peak of the move here. But I don't bet against it. Like that's the one thing I don't do is bet against the market. But I just didn't get a good enough entry on NASDAQ. I was waiting for it. Yeah, so like in China, roughly about 8 o'clock my time, 9 Eastern is like Chinese morning. So it'd probably be like later tonight that they would have their actual phone call. But the idea is that I'm waiting for an R session. Trump likes to plant the news in our session to create the volatility. Like, I'm expecting the news today to have a headline where Trump says, we're going to press China as hard as we can, and we're going to respond to their 10% tariffs with something even worse. So as a trader, I'm anticipating that. Like I tell you guys, this is the most important lesson I learned. I had a buddy of mine who was an annuities trader for an insurance company. His name was Keith. He's a buddy I went to high school with, and he always told me, he goes, I learned in this business, there's one thing that I have done the most, that I've learned the most about like behavior. And, they trade little things. They're not trading momentum type things. They're trading bonds usually. Fixed income traders usually, trading bonds. They're looking for yields, safer plays. And they have like this saying, it's like he used to say, what we say here is you don't pick up pennies in front of a steamroller. You take your safe wins little by little by little. But when you see a steamroller that's possibly coming your way, you remember like Austin Powers when he was like, no, and the steamroller was like really far away but coming towards you. When it's very possible that a steamroller is there, there's no reason to try to pick up a few pennies along the way. Let the steamroller drop you to a bull target and then get the momentum play, get the volatile play back up. So, and I've learned trading Trump is that, again, this is where the newbies are going to get handed to them. If you didn't trade Trump before, days like this, you just remember, the news, like it's buzzing in your ear that somebody's going to say something at some point. There's going to be activity in the market. And that's all I'm trying to tell you guys. So, in this environment, that they're going to say something at some point, and that's what I wait for. I let the news move the market, and I don't, there's no trend or anything happening right now. This is short covering into Google earnings today. This is short covering into people betting on the big tariffs in Canada and Mexico. They're just getting squeezed, but I'm waiting for the new event. I've traded Trump long enough to know that days like this aren't strong rallies. They're short covering before something. And we have a buzz right now in my ear that says, I'd love to see some really nasty news come out and toss me a dip to buy. And it's generally at the top of an hour or generally 1 minute after the options market closes. It's always something that it makes it hard to trade. Do I think by March we'll have a clear direction? I think the market by the third week of February, according to our monthly maps, has a clear direction. So we clear out the week after next, and the market is back to being bullish. So as long as tariffs and these other things don't change the dynamic, the market was already structured for a noisy February and a bullish March. And that's what we said back in December. Monthly maps can look 3 months into the future. If you guys use Rocket Scooter, by the way, if you don't use Rocket Scooter, you need to. Monthly maps shows you the future dynamic of the stock market. This is the options landscape. Now, this is a little noisy right now because of the environment they're in, but let me show you a few questions. Or show you a few answers to your questions. What are we looking at? Well, this is showing you, are we in a bull or bear zone over time? This goes out through April. Look, this is April. Hold on, let me make you can see this. So through April, you can see that at exactly 524 QQQ, at least through March, you've got bull zone underneath you. So when you're trading in a bull zone, it's a bull market. And the next thing is that when the bull zone is sloping down, the bull market is becoming stronger. There's more in the money calls, more buying against them and stuff like that. The problem lies in the bear side, which is the light gray. If you see the light gray sloping up like this is a heavier short on the market. And what I'm seeing and what everybody here, Rock Scooter's been buzzing about lately, is the fact that the current price that we're at in about a week is a bear market until March, and QQQ at least. This is bad news for the market. This is a topping pattern for the market. This is a reversal pattern for the market. This is showing highs in the market. There's resistance and there's no bullishness here. The top of these light gray boxes is resistance. So as you see, between now and the beginning of March, that's the top. This is likely pulling back before it goes higher. And that's how you read this until news changes the dynamic. So because when I drew like my greater market thing, right? We talk about greater market has 3 indicators. One of them is the DD ratio right now. If that number is greater than half, then the stocks are all bullish in the S&P. So that's good. That's nice and bullish today. The second thing is SPY itself above its monthly gamma exposure for market makers? Is it? Yes, the answer was it was. SPY is clearly was above this orange line. So on the month scale, which goes from options month to options month, SPY, so this is like the now indicator. This is like the roughly 1 month out. And then monthly maps, which is what you see to the left, is a 3-month projection. This is the best tool we have for swing traders or market sentiment. It looks about 3 months out, and we can paint a picture of what the options landscape for market makers looks like because we have all that data. We're the only people in the world that has data because we created the data feed for it from the raw data. So we have a market maker options data feed that we created from our own data. We could pinpoint the landscape of the speculative traders against the dealers. When the bear zone slopes up like this, the market is getting a very heavy hand to the short side. Let me give you the little handout. So everything we do here, if you want to learn, our classes are $1 a day. By far, and I'll tell you this, let the people here tell you if you've never taken our classes, we don't sell them to make money. We make them $1 a day so that you can afford. So anybody can take them. We want everybody to learn this. There's a checklist. We give you these handouts so you could read what this stuff is. So this is painting a picture of the landscape. No lie, this is not a bull landscape. It looks really bad for QQQ. As a matter of fact, the bear side projecting is getting worse by the day. And the bull side, while it does look good until March, the bull side sloping up, as you see right here, shows bulls are exiting position or liquidating. Bears are shorting more. When you have them both sloping up, this is bad for the market. This is an illiquid, volatile nightmare for NASDAQ. Now, NASDAQ isn't the stock market, it's the NASDAQ. But what it means is tech is exhausted, and the tech rally is likely over for now. At least the positions are stating that this isn't going to break out to the upside anytime soon. As a matter of fact, it doesn't have any stability at all, except for the slowly forming bull zone that we see right here. This pivots up, but as you see, there is some growing bull sentiment or still lingering bull sentiment there. We want to see this particular week change to where these dark grays move like this and overcome those light grays. Crucial first 2 weeks of March are the areas we're watching. So every single day, we're like eyeballing this to see if that gets better. Does the bull zone overcome the bear zone? So every day, these numbers will change. What you want to see for a bull market is both of the zones sloping down. So the inflection point right here where it gets really bad is what we're watching. So March is the key area. February is choppy garbage. Okay, there is no direction on February. But March for QQQ is really bad. So every day we're watching this to see if it gets better. But right now the market is not building up in tech to have that volatile. To have that non-volatile bull market. Now, tech is not the stock market, or QQQ is not the stock market. NASDAQ is just the NASDAQ. The stock market is slightly more promising. It tells you as tech is exhausting, which means if tech exhausts, then the S&P, while maybe not be bearish, it still might lack the momentum because tech stocks are the heavy weighted stocks at the top of the list. So a little bit extra info for you here is that the bull side is liquidating and the bear side is strengthening over this week. This is a bad week. This is part of the caution why I'm not chasing along here at the top, because the market is in clearly a liquidating phase where we have news likely to happen. Options expire right around here in February. Then after that, the bull market is slowly starting to build and the bear market is slowly starting to weaken towards March. And that's why I say we expect February to be choppy and kind of but March is going to clean up because the S&P is certainly clean. People are going to be rotating out of tech and into other things and finding dips in other places. And of course, earnings are going to matter. But right now, the structure is clean such that after February's expiration, March is a clean bull market, and March is when we're going to break out to highs. It may not have a lot of momentum, though, because QQQ is not playing that game. QQQ is bad. So the S&P is likely to break out of highs slowly and not have a lot of momentum, not a lot of big breaks to the upside. Aha! So I don't trust big breaks to the upside for these particular reasons. So I know that the S&P doesn't really have momentum. It's not built into this. So why are we moving? Well, it's a short squeeze. Shorts are covering. And that's expected in this environment. So S&P is lacking momentum. The structure is not there to produce momentum. There is not a lot of volatility. Big VIX is high. VIX is relatively low. This is just short covering. So in this mode, right? So being long has a better edge for now. Absolutely. Like there is no evidence other than the monthly maps are the only thing that doesn't show bullish momentum. Right now, monthly maps are actually down in the S&P in the short term. So in reality, the structure is actually showing a weakening bull side, which is understandable because this wasn't a strengthening bull side. This was a short squeeze instead. I like big breaks and I cannot lie. Seasonally, April's a bearish month. Seasonally, well, there you go. All right, so right now, I got to be very careful chasing into a long. Now, today, we'll probably hit those upper DD bands. I think QQQ is going to lead the pack. So with SPY, what I think is going to look like, to be honest with you guys, I don't know why I keep getting this blank. There you go. What I really do think we're going to see, and again, it's all based on Trump, so it's really impossible to guess what we're going to see. But on the timing as it goes, on March expiration, we will be breaking highs. But it's not going to be like super strong break, right? I feel like if the tariff news gets bad, the market's going to try to do something like that. And then break out. And the worst case scenario. Best case scenario, it just like flip-flops around for a little bit. And then slowly starts to pick up a little momentum like that. I don't think we're like this. I think it's like inching along with some volatility possibly, but tariffs are going to make all the difference in the world. Right now, it's like this mode of trading is like wait for tariffs to create a dip and buy the dip. Never chase inches. Never try to pick up a few pennies. Let the steamroller come and buy the dip. This is how I've been trading these tariff news very successfully, by the way. But as I showed you earlier, by the March expiration, we should be breaking highs and back to rallying. So whether the tariffs kick us down a little bit and then it like starts to move higher off of the momentum, or we just inch higher, it's still pretty good. Nothing is bearish in this market, guys. So like the thing to note is that there's nothing bearish in this market. Because tech is not rallying, we're not going to get like this exponential move higher. Tech is kind of the limiting factor, so we're going to like mosey on higher at best case scenario, slowly. Like we're not going to bump thousands of points this week. Now earnings can change that. Well, we'll see what earnings does, but just be cautious with that, right? I'm very bullish this market. Looking for that upper DD band tap today, NASDAQ. That is the limit. I think that we hit. I think that here, QQQ is the limit as well. That bull zone touch is from here. If those of you are opportunistic, they're like, I like to fade bull rallies. This is the fade spot. I don't fade, though. That is the spot if there is a fade. Bear zone, sandwich inside of two bull zones, the market usually passes right through it like it's not even there. With DD ratio greater than half, it's likely to finish off there. The only reason I'm not continuing to trade this is because there's only about 40 or 50 more points on NASDAQ. So this is the high today. We were not going to break and rally into earnings. That's for sure. VIX gap just closed. VIX is in decay as well. I would just, let me take a look at where the level is. VIX is about to hit a bull zone bottom. So one of the things you're going to see on UVXY is that you're going to see this light turn yellow in a second. Maybe a couple of minutes. And that's going to show that volatility is possible. And we always have caution there. So usually when that light turns on, I start to trim my longs anyways. Okay, guys. So here's some deals we got going. I think it's 65% off of all fast tracks. If you like the fast tracks at Elite Trader Funding, we have 30% off across the board at Tradeify. We have 50% off of Take Profit. I now have a code for Take Profit. You guys want to use them? Check it out. Apex is doing an 80% off sale. Use our code for all of this. All proceeds go to support the company and platform to build cooler and cooler stuff for y'all. And you guys buy a lot of prop firm stuff. I'm going to tell you, with the amount of prop firms you guys buy, I can hire a whole lot of employees. Y'all buy a lot of prop firm stuff, which is extremely helpful for our growth. So thank you for using our code. If you use anyone else's code, we get the same deal as everyone else. You get a choice when you get to choose an affiliate code. You can either pay somebody's Lambo payments and let them spoil themselves, or you can use our code and in turn we spoil you with the proceeds, because everything we make goes back into the platform. So consider it like a cash back card, if you may. For every prop firm you guys do, please use our code, because we're going to staff up and build more stuff with the sales. How do you get the Lambo for yourselves? That's the next question. So what we'll do is we'll save up all the money from the affiliate, and then we get to Lambo, we'll give away one Lambo to one lucky person named Matt. No, I'm just kidding. That's how we'll do it. Anytime the rocket scooter code isn't used, the puppy is kicked. Please update affiliate code with the Take Profit Trader. Yes, thank you. Thank you. So like I said, other people, this is a way for them to make money. For us, this is a way for us to put it back into the platform. I have dreams of expanding this so big. And the thing is that we didn't go out and get investors or whatever. I spent countless millions of dollars building this company from my own pocket, and so did my partners. We all just pitched in our own money to build this. And so, we inch forward. We get somewhat bigger, we hire more people. We get somewhat bigger, we hire more people. We've bootstrapped this whole thing, which is I'm very proud to say that that's what the aura of Rocket Scooter is. I built this in my garage with a small group of people. I didn't go out there and get $20 million of VC funding or whatever to pull a startup out of my ass. I built this platform from scratch with a handful of people. And so you guys are pulling in, enough sales, the extra 5, 10, 20K a month that could come in, projected, is enough to hire 3 or 4 more developers. I mean, that's, to me, I'm like, oh, that's amazing. So you guys consider every time you buy a prop firm code, that you use, that's our code, it goes right back into the company, which is great. All right, let's update that for that. Take profits. Let's add one on here. So we really appreciate you guys supporting them. Our thing is to build something for you guys. And actually for myself. I'm not going to lie. I build Rocket Scooter for you, but I also build it for me, because this thing has been tantamount to my success as a trader. I didn't have 75, 80% win rates before I had all these tools in front of me. Oh, no. No. My technique, and again, this doesn't guarantee your technique, but my technique got infinitely better when I took this patient approach to trading. Oh, went through the roof. This is my first time doing Tradeify. And I have a whole rule. I got to make $9,000 in 10 days. So I'm going to make $20,000 in those 10 days. And I'm going to make between $2,000 and $4,000 every day. I can make $2,000 in 8 days, $4,000 in 2 days. And then I got my 20% less consistency, and have both my profit target for first and second payout. I'm that specific. I can afford to be that specific when I have the tools to allow me to be specific. I can plan out my P&L curve. I can plan out my risk to reward every single trade. I can plan out which days I do want to take. The only reason I didn't even jump in on the long is because this is a prop firm. In my regular account, I would put money in and then bought the dip. I always DCA on dips when I chase along. Prop firm accounts, you really can't afford to take drawdown. You have to wait to get the setup to do it, because you have to navigate a certain P&L. So part of the problem with why I didn't take a trade is because these prop firms, you have to navigate a P&L. That's the one thing that you have to take note of. That makes sense to you guys, right? You have to drive the boat. You have to cut your wins early to meet consistency. Does that make sense? You guys know that, right? You can't just YOLO long or chase along. You got to make sure it's navigated correctly. All right. All right, so let me update. Thank you for remembering that. Use this. I'm going to have like one bot post that will say like use all of these. Like go here for the codes. So I need to make like on the Rocket Scooter website or something. I need to like consolidate everything into one place. Here's all the codes. There you go. There you go. Ooh. The RR metrics are very, very, very important. Yeah. Well, yeah, obviously it's there for a reason. Every rule a prop firm tells you you can't do is because it works. And everything they put there to give you a rule that you can't do or a hurdle you have to overcome is because it's a high probable failure point. So yeah, so I have to navigate with a good risk to reward on every trade I make because I have to keep my trades in the same consistency boat. So while I didn't identify the risk was too high for me to jump in, that's why I didn't. On these prop firms, I couldn't afford to take 40 points of drawdown, or sorry, 160 points of drawdown in QQQ, which, you know, equivalently was like 20 points on the S&P. So I couldn't do that. That's why I didn't chase it at the open. That is the one downside to that. Like I'm still trying to maintain like an 80%, 70, 80% win rate here. If I had infinite drawdown and no scaling, yeah, you'd be a cajillionaire. Yeah, like I honestly on these flat opens and gap and go with positive res, I usually just long at the open and I'll let myself take $2,000 or $3,000 of drawdown to get a $10,000 day in a single account. Easy peasy. I always let myself do that. But in these kind of accounts where you have to execute control, the unfortunate part is I didn't want to take 20 points of drawdown. What I waited to do was that I said, okay, if we dip, I'm going to long from here and I'm going to long from here. I'd rather have the better trades with less drawdown. So you have to navigate the drawdown range. Right now, I've passed 2 of the 5 Tradeifys, so I'm guaranteed payout on these if I hit the consistency. So I'm actually pretty close. I did very well. I'm at like 21% consistency, which is good. I just need to get like one trade, maybe like a couple thousand more bucks, and then I'm good for payout. That's gonna be nice. So today, I'm looking for upper DD band tap today. I think that this is gonna be a nice little break to the upside here to there, and that's basically it. Let me start to like rearrange some of these DOMs here. Can I fit 2? Oh, it'd be kind of cool if I could fit 2 of them on here. Maybe I can do that. But then I have 5, so I don't know how that's going to work. I don't know. You hate ETF's 23% rule? I also hate it. I love ETF, but I hate that rule. But you know, their accounts are dirt cheap. for that reason. The cheaper they are, the harder the rules. That's the name of the game. You just sign up with Tradeify using your code Abu. Oh, awesome, man. I actually really enjoy my experience with Tradeify and ETF. I in Top Step, I've enjoyed all of them. I've used those guys, and I really, really enjoy their service. They all do good. Tradeify is great, actually. Probably my favorite experience as a user and an affiliate. Both of those pieces are very clean. The dashboard is clean. The reporting of your trades is clean. You're gonna have a good time with them. What does the software say Tesla will end by Friday based on the data? So remember, does Tesla have earnings, or do we already have earnings on Tesla? That's the question. So the monthly map is showing a clear divergence in Tesla. When they split out like this, it means volatile and its downside. So it's currently planned for bullish liquidation and bearish liquidation. So this actually means volatility. So when you see the zones racing apart, like fanning out like that, it usually means a widening of the range, which usually gives it room to move on earnings. Is earnings coming up soon for Tesla? It already happened. An expansion of the range almost always typically means downside before upside. Tesla announced last week. Okay, so basically, again, when you have bulls fleeing and bears fleeing, the market becomes less liquid, less participants, so the range gets wider. So we had like earnings were last week, right? Okay, so Tesla, imagine this is the range post earnings, and imagine it has some widening to it. So the way that I see it is that usually increased volatility, which is like number 4 on this little cheat sheet, right? When they're pulling apart like this, it means volatility is increasing. So Tesla is likely to get wider as the days go by. The candles are going to start getting bigger and bigger and bigger on the daily. And you can kind of already see that, right? If I were to zoom in, you can kind of see how, you know, the modest small candles are now bigger candles. You see that widening? Like here's the range, right? And then here's the range. Y'all see that? You see the widening. Monthly maps have been telling you that since earnings, right? It's easier when you can zoom in like by scale. Y'all see this? Like Tesla's moving up and down much bigger than it was earlier. Like, you know, this is moseying along and then it's suddenly getting in a wider range. So be careful on this because increased volatility means the market can fall pretty quickly if there's sellers. But the bears are fleeing, which means dips are going to get covered up. So usually when I see a fan like this, I like to wait for a flush and then I buy the dip right back into the range like that. And you know, the widening is, you know, you can't predict which way it's going to go, but I love to let like this flush out and then trade it back to mid. I always think of it like that. So right now, Tesla is not in a boat, at least in general for the month. This is a month of structure to show it's got bullishness from here. And on the daily mode, you have to look at Tesla. Nothing is showing up bullish. This liquidity map is what they call mean reversion setups. You have long pressure from there to there, long pressure from there to there, resistance pressure from there to there, and the majority of days should close here expectation, right? So Tesla is just wide and choppy with no bullishness. And as the monthly maps, which is stretched out daisy chain next to the liquidity map, which is everything compressed into the right now, balance for time, Tesla has lower before higher feelings to it. Does that make sense? So as you see, the break of Tesla is again being liquidated as the bulls are planning on liquidating this entire month. Excuse me. Yeah. And so, like, as I'm talking, Tesla's finding lower lows for the day. Not necessarily a bear setup, but as you can see, you know, Monthly maps paint that picture. So like I wouldn't have believed a false breakout rally like this on Tesla because of that particular volatility, right? Pretty cool, right? Do I have the access to the pass rate statistics for ETF? I don't, Momentum. It'd be nice to have some of that stuff. I'd love to be able to give you guys actual data for these things. I would say that, in all honesty, ETF and Apex are the hardest to pass. They have harder rules. I would say the easiest to pass for me is anything that has end of the day drawdown or straight to funded. ETF has an end of the day funded option. The one thing I like about ETF is they have one of every option. So they have like a competitor for every kind of firm out there. They have like an Apex style, super quick, static account, fast track account. They have an end of the day drawdown. That's similar to like the take profit of the Tradeifys. So I love end of the day drawdown. I will pay money to have that every single time. End of the day drawdown is bay. The unrealized drawdown is a killer, right? So I go straight to funded with Tradeify to skip that step. Not only do I skip the eval, but it's end of the day drawdown. It's worth $500 an account. With our code, it's 30% off. So I think it's like $480 or something per account, something like that. Crucial. You may think $20 Apex, 100K accounts are worth it, or $40 or whatever, and then you pay the $80 to activate them, and then you fail, then you repeat 3 times. You've already spent 5 times on the account because the trailing drawdown killed you. But pay the money. You want to get paid out the fastest. Pay the money to skip the eval or go straight to end of day drawdown if you can. If you can afford it, the success rate of that goes through the roof because of all, I can tell you anecdotally, but I bet you can all say it too. Intraday drawdown is the worst fucking thing on the planet. The worst. You get kicked out of your account even when you win a trade. If you just hold on to your winner too long and it falls a certain amount, you busted your account. That is stupid to me. No real trader experiences that. That is a gimmick to make you fail. So pay the money, as Momentum says, to get rid of anything that says trailing drawdown. Don't ever think that you're a bad trader because that squeezes you. No real trader punishes themselves for losing a little bit of profit along the way. Yeah, 5 times 15, 75K. Yeah, Gideon, that's basically what I'm aiming for. So what Brett told me is that they pay every $3,000 per account every 10 days. So 15, 15, 15, 15. But I'm sure I'm not going to make it until the end. I'm very sure, as historically proves, I will get thrown into a funded environment very soon because these prop firms don't like me taking their money, which is cool. But what they do that's cool is they move $15,000 per account into the live. So you forfeit the rest, which kind of sucks. So I would whatever I accrue, if they decide to kick me live, I get a max of $15,000 per account. So with Tradeify at max, the live account is a $75,000 account, which isn't bad. What if you have $20 to spend? Where would you go? If I had $20 to spend, I would grab ETF or Apex. ETF is slightly harder rules. Apex is slightly more subjective in their payouts. Apex is very much like, here's this rule that you didn't follow, and you're like, where is it stated on your website? They're like, yeah, we just think it's bad risk management. You need to trade like 8 more days. It's bullshit. They do that. And again, they're not clearly stated rules. So I think $20, I've heard enough stories about Apex that I'm losing faith in them. But I don't have proof that that actually happens to real traders. I don't. I just hear stories. But I don't know if the people that are getting denied are just trading like shit. But they have these rules that are like, if you take a certain amount of drawdown and you break even and close out, this is what happened to me. They go, your reward to risk is, your risk to reward is bad on these trades. You're not using a good risk management system. I'm like, bullshit. I'm using the best risk management system in the world. We had 80% win rate. They're like, well, yeah, but you drew down, cost averaged in, and then you broke even and closed the trade. So that's not good trading. I'm like, you guys are idiots. That's the best trading there is. I'm one of the best traders there is. With that particular, they use things like that to deny payouts to people. So trust me when I say when you have 2 bull pivots and you trade both of them and break even, that is a good trade. It's a very good trade. It takes a lot of skill to do that, and that's actually risk management. That's a losing trade and a winning trade coupled in one, but because you didn't close out the trade, it's perceived as taking unusual drawdown for a little gain. And that's why these trader funding programs, they just make up rules as they go along, and that's why you got to be careful. The only way to make money as a trader is to manage your positions and manage where you enter the trade and get out of the trade. That's it. So an example would be if I had a long pivot from here and a long pivot from there, and they're very close to each other, and I longed and it fell to my second pivot and I longed with like 3 times the amount, and the market goes to here and I close out and make a fortune on that trade, they go, yeah, but you're one of your trades broke even and the other one went in. I'm like, yeah, one of my trades was flat. Another one of my trades made profit. But then the way they see it is like, well, you took 20 points of drawdown to make 0 points of gain. That's bad risk management on that contract. And I'm like, that's just stupid. I could just take in a stop and then long there, the same thing. But that's not how real trading works. A real trader will understand those limits, and you can DCA in if the limits are close enough. I teach that as part of my trading strategy. Risk management, my ass, I have an 80% win rate. You can suck it if you don't like those rules. And I would say people that it's subjective, and you got to be careful. I feel like I don't hear horror stories about ETF subjectivity. Their denial rate is much less than the Apex. So, you know what I mean? So, like I said, Apex is, if you got $20 to spend, try an Apex, I guess. ETF also sometimes has 80% off sales. They just don't always have that. So if you have $20 to spend, Apex is usually your only option. What's up, Killian? What's up? What's up? Just trade your account. Not everyone trades prop firms, or just trade your own account. Yeah. And I'll let you guys know the only reason I trade prop firms is because you guys trade prop firms. I'm forced to do the bandwagon. Sucks. I honestly, I make so much more money if I didn't do this. But the brand and the stream and the trend is this. So to stay relevant in the space, I must play the game you guys play. Yeah. Mirhana doesn't. Yeah. And that's the thing. I was like the only real trader up until last year. Like, I was still trading my real accounts, and everybody that's prop firms is like exploding in growth. And we're trying to get, Rocket Scooter's visibility higher. And so because of that, we were an elitist community of just really solid real traders. But we know that there's a growing, in the educational space, there's a growing wave. I mean, it's massive. I mean, it's so crazy. When I tell you this, like in 2016, all the big future streamers, there were 3 of us, literally 3 of us. There was me, Matt, and Pat. And that's it. That long ago. And each one of us had less than 500 people watching us. These days, everyone's got thousands and tens of thousands of people watching them, because futures exploded because of these trader funding programs. Like last 3 years, trader funding programs have made futures a thing people do now. And unfortunately, the people that are doing it aren't actually trading or have the capital to trade. It's just like what they used to do, the penny stock thing. Well, what do you do with you have $500 you trade? Well, you gamble on a penny stock. And that was hot in 2016 to 2020. At that time, you had like the Tim Sykes of the world and the Warrior Tradings and the Jason Bonds. You guys remember all those? Eat, sleep, and trade, baby. Trade over the weekends. Make money when you wake up. All those people, they got sued by the government for saying that stuff. Y'all remember that? That was hot. That's where all the newbies were before COVID turned people into futures traders, because prop firms became so widely available. People didn't have to go trade pump and dump pyramid penny stocks to have a chance at turning their $500 into profit. Futures exploded in popularity. Seeing the industry grow, from my perspective, as a tech provider, as a trading platform maker, and as a futures trader myself, is night and day difference. Anybody can tell you. Back in the day, freaking Warrior Trading, dude, Ross Cameron, pumping and dumping penny stocks, right? This kid would have 30,000 people watching his stream. That's where all the new traders were. And fast forward, as people realize that's a gimmicky way to trade, and he's the only one that made the money doing that, that everybody decided that they weren't actually being kind of, I don't use the SCAM word, avoiding a loss. He wasn't scamming them. The industry is a scam. Penny stock is a pyramid scheme. It's a scheme, not a scam. It's a scheme. It's a scheme where the first person in wins all the money from the people that come in after. And people figured out that scheme. They realized the only way to make money is to make a trade room. You know why? You remember the lineage of that? Tim Sykes was first to do it. And what's crazy is that I think I might get this backwards, but I think Jason Bond was in his room and decided he'd be smart and make his own. And then Warrior Trading was in his room and he thought he'd be smart and make his own. And these guys all were in each other's rooms and got the great idea of, I'm not making any money. I need to be at the top. You realize being at the top of the pyramids where all the money came in that industry. Anyways, we used to meme it, and then we used to always talk like, man, it'd be so cool if people just realized how great futures were. The taxes are better. You could trade 24/7. And, you know, we never traded penny stocks or that nasty shit. But like we used to always talk back in the day, Matt and I would collaborate a lot, and we'd be like, how do we get in, you know, how do we get exposure for the futures industry? Even Tradeovate. The CEO of Tradeovate was always getting on calls with us like, hey, you know, we're trying to help build exposure for the industry. We're creating, you know, micro futures are a thing now. Do you guys mind talking about micro futures on your stream? And then when Nanos came out in the FairX, the CEO of Tradeovate called me again and was like, hey, you know, we're doing this thing at FairX. You could trade nano futures. We're trying to build exposure for the futures industry. And these products were kind of like built to compete with the penny stocks and thing to make futures more affordable for traders. But what nobody understood was the potential of these prop firms. That alone was the explosion. And Tradeovate built the API everybody used until like Top Step made theirs and others are starting to make theirs now. But they were trying to get exposure for the futures industry, to grow the futures industry. But 100%, the CME group and the futures industry should be sending all of us out to Chicago for a fucking after party and putting medals around our necks because we're the ones that built the futures industry for their future. Me. I did, Matt did, Pat did. These guys out there hustling and showing off prop firms, we alone built the modern futures industry. We have created hundreds of thousands, if not millions of futures traders out of stock traders and options traders through this prop firm thing, through the influence that we have on the futures market, which is great. I love the futures and out front center, and we were all the originals to do it, which is why we were able to grow our businesses all so big. And now everyone's getting into futures. It's great. It's a great time to be alive. Futures is the best thing to trade. Period. Don't get better than futures. But at the time, the big streamers that would get 30 and 40,000 people were penny stock streamers. That's what was hot. 2016, 2017, that was what was hot. Now, prop firms are hot. That's it. Big reason why people trade cryptos. Now, yeah, so the penny stock kids went to crypto. It's the same thing in reverse. Crypto's the new pyramid scheme people are. These are people that just don't have time to trade and don't have capital. I feel like the people that day trade or try to trade crypto, no offense if some of you don't make, like PJ, I think trades crypto. But the majority of crypto is working class people. It's the kind of people that would buy a scratch off lottery ticket when they get their paycheck. That's exactly what you're doing. It's that mentality of, you know what, I'm just going to get lucky and get a payout. It's not like people that are sitting there and day trading. Day traders would definitely avoid volatile, illiquid nonsense and trade something of substance that's regulated, that has better taxes. I don't think you get taxed on crypto. Thoughts on Forex? Forex is one of the hardest things in the world to trade. Mechanically, it's okay. But technically and fundamentally, Forex requires you to have exposure to the mechanisms of why those currency pairs trade against each other. Which, like, if you're, again, trading like the US dollar against the euro as an example, or against the franc or something, you have to understand what's going on in Switzerland versus what's going on in the United States, and tariffs against each other, and the value of the dollar, and the exchange rates, and the GDPs of each country, and the price in each country is what you have to pay attention to. So if I'm trading the S&P, I got to understand the fundamentals of the S&P. Typically, all that stuff happens in a 9 to 5. If you're trading currency pairs, your ear has to be to the ground in our market and the ear to the ground in the market that the other side of the pair. So I don't know what makes it more palatable or easier to watch two things. I'd rather be sleeping when European markets are open, not reading the news and setting my alarms for in the morning to see what's going on in Europe. The problem with Forex is that you have to pay attention to a lot more and do a lot more homework to understand why it moves to begin with. But most Forex traders, though, are just using technical analysis and just trading price action, which we know is a failure point to begin with. So to be a proper Forex trader to actually do well, you have to understand quantitatively what prices that stuff and fundamentally what the value of each currency is relative to the other. So like when I was trading oil, I had to wake up at 3 o'clock in the morning once a month for those OPEC meetings, right? I had to listen to Al Jazeera news in the middle of the night. I used to be like 1 in the morning, 2 in the morning, like scanning to see what's going on in the Middle East when I should be sleeping. And so it's harder because of the time difference, because your ear needs to be to the ground and at a time you should be sleeping. That's what I feel about Forex. Whereas the majority of influence in U.S. markets for trading S&P futures is going to take place during U.S. hours. I don't really got to go when I should be sleeping to listen to Twitter to see if Donald Trump's going to be saying something, right? Yeah, so you got to kind of like be living the bet. So Forex trading is very popular in Europe because European markets and U.S. markets overlap, which is good. European markets will close roughly 2 hours in the U.S. markets being open. The overlap is there. So you're trading and you got both markets open. For us, we don't get, we get that same 2 hours there, but they get the news before us because their day starts before us as well. So it's like, it's very popular, I think, over there. Web3 is different than crypto. Crypto speculation shouldn't exist. I agree. Crypto speculation is, I make fun of it so much, I know, but there's always going to be something like the penny. There's always going to be the lotto ticket that the working class people speculate on. Or just, I don't know, penny stocks last decade, crypto, NFTs this decade. Next decade, it's going to be something else. Same thing, different name. Even with trading stocks, when you started, you had to get up so early to read earnings reports. Yeah, as Michael says, there's a lot you have to do for stocks. Upgrades, downgrades, analyst reports, predictions, fundamentals. You had to read earnings calls after the market closes. Go through the transcripts, listen to an earnings call. There's a lot of work to trade a certain thing. Fundamentally, you should always be aware of what you're trading fundamentally. Index futures are easy, the easiest thing to trade. They don't have single point catalysts that are hard to determine. An example of a single point catalyst is like a commodity, right? You're trucking along, then all of a sudden a drought just appears and kills all the crops and the price goes through the roof, right? Like a thing that you couldn't predict happens. Mad cow disease kills all the cows. A fungus kills all the oranges, whatever, it's like, that sucks. Oil. My country is bombing your country. Oil goes through the roof. It's like this kind of shit happens all the time. And single point catalyst, it's a commodity that has it's a supply and demand influence. And, a hit to the demand or a hit to the supply really just kicks that thing up or down. It's really hard to trade commodities because of that. The S&P and NASDAQ doesn't really have a single acting influence other than President Trump. The market is diversified to where if there's a chip shortage around the world, the entire stock market isn't going to crash. If mad cow disease makes the price of hamburgers go up at McDonald's, Pepsi's not going to be affected, right? It's like you don't have a natural disaster apart from COVID shutting every business down all at once that tanks the stock market. The stock market is much more resilient to news, and the news that does come out is predictable. CPI, FOMC, GDP, we know those things always move the market, non-farm payrolls. So you can even know when to avoid the single acting catalyst, the all-encompassing thing that pushes the entire market in one gulp. You could easily afford that. QQQ EST? Yeah, but like I said, I'm being a wuss today. Yeah. What makes you see NQ will reject off resistance around 21,710? Only 4% of days move above that line. 96% of days reject it or close below it. That's why. It's back test. Oh, let me show you the cheat sheet. Have you guys taken... Okay, let me plug the classes really quick. You've not taken our classes. Hold on. Let me open up these cheat sheets here. Who here has not taken our class? Our courses? I want to show hands. Who has not taken our courses? Our boot camp. It's literally the best day trading course you will ever take, and it's the cheapest. It's designed to be as free as it can be. It's $1 a class. Okay. So we give you handouts with the probabilities of things. So in this particular sense, like as you see at the top of the screen band, we give you this. This is a futures margin. It's an exploit of margins in futures. When this ratio is greater than half, I don't short off the band, but it often rejects off of the band. 88% of days will close in the middle. 96% of days will close below the upper. In ideal conditions, which we do have. So it's a very high probability that that's the high of the day and rejects. I still don't short it though, because the ratio is still bullish enough to not short it. But since it's the end of like the long projection and very rarely does it break and keep going, I don't take the short. I'm sorry, I don't long further on that. I let it break and then I can chase along if I want to. But it's usually the limit of the day, which is why you don't see me doing much here. Is it normal to go from one band to the other? So about a quarter of days that break to the downside, or I think it was a third to a quarter of days that break one way, go the other way. So that is very, very probable, yeah. So the recordings are in a channel called 20-Day Bootcamp. If you guys go here, it's 20-Day Bootcamp right here. I'm going to tell you guys something. I'm telling you, there's a reason. I want you guys, if y'all are out there spending any kind of money trading or doing trader funding programs, I'm going to tell you. This is the link right here. God, I love our website. It's so pretty. $20. That's it. It's not a $2,000 workshop. It's a $20 for the whole month, and literally is the best. I'm going to tell you, the best thing we've ever done is this training. And the reviews are here, and you can read what people say that have actually purchased this thing since we started doing it in August. And you can count the number of 5 stars, and what people say is honest reviews. Just go read what people say. Because people are like, why is this not $1,000? You know, you should really charge a lot for the, like it's, the platform is our core. We want people to learn risk management. We're not trying to do a trader boot camp to sell a trading course. It's to literally train people so you guys are good at what you do. That's our goal. So we make it $1 so that it's practically nothing. And it's not always going to be on sale. So we did it once in Black Friday. We took it away. People asked for it to come back. We brought it back. And at the end of February, we're no longer going to sell seats to the boot camp anymore. The $1 a day is going to go away. And the boot camp is exclusively for platform users only, which is a little more expensive. So we're keeping it open through February for people that want to do it. And after that, it's just a treat. Because what happened was we closed the doors. Everyone was like, oh man, I wanted to do it. I wanted to get in. Oh, I wanted to do it. I wanted to get in. And so then that was like, okay. And we opened it back up and like 300 people signed up for it. I was like, okay. It's the same thing again. February is it. And we're doing this thing in February where our platform is, we have a $40 discount per month for life, which we never have discounts on the monthly. It's normally $200. It's now going to be $159 a month to use our platform and tools. And it's $99 for the first month as well as a half price discount. So that's very popular with everybody. And you can lock that in for life. It's a permanent discount so that prices never go up for you. And that's like really popular for a lot of people here. Check it out. All right. There's the link. Dude, take the boot camp. If there's nothing you haven't done, just the boot camp is where it's at. And you get access to like the community and stuff. I think you do. Boot camp. Let me double check. Members, hold on. Somehow my brain is telling me we don't give you access to the chat channel. Oh, no, we do. Okay, you do get access to the Discord when you do take the boot camp. Perfect. Perfect. Not picking up pennies in front of a steamroller. I am 96% when you ask that question. I don't ever make the trade every day, but I do like what I see. You know what I'm saying? Picking up pennies. I know. You guys have bigger balls than I do, man. Picking up pennies from a steamroller. Oh man. Don't even tell me my hair looks like it just crawled out of bed. iDoc and I are starting a workout regimen again since we were sick for like 2 months. And now we're actually getting back to working out. Like I feel like I've gotten like chubby, pudgy, if you may. I get winded when I walk 3 flights of stairs. So, you know, it's like we're getting back to our boot camp now that we're both not sick anymore. Do I do overnight trading? I do sometimes, only at monthly hedge pressure taps or DD band taps, and that's it. Specific setups only, and when they're available at the start. I don't like to be committed through midnight. I'll try to scalp a 10-point or 40-point NASDAQ, 10-point S&P off of DD and MHP if I can get it overnight. Yeah. When I pick up pennies trying to pass evals, oh no, so evals different, man. When you have 80% off of Apex, burn through them with max risk on the table. Like when they're $20, this is the trick. It's all about time versus money. And I teach this. I'm going to teach a boot camp for how to hack trader funding programs, how to get the best bang for your buck. When you have 2 different options, you have eval, okay, and then you have straight to funded, okay. Let's assume that we're not doing the straight to funded. We're only looking at eval. Under the eval category, you have 2 different camps. You have hard 20 account and cheap. They're all the same. It's your Apex. You have your easier 5 account expensive ones. Okay. Tradeify, Top Step. This is ETF and Apex. So when you're doing your hard $20 hard 20 account cheap, you have 2 ways to trade them. Number 1 is when there's a sale. Number 2, when there's no sale. Okay. The rule is when there's no sale, someone else is having a sale. Someone's always having a sale. So when you're trying to pass evals, always go where there's a sale. If you got 10 gyms in your city or 12 gyms in your city, and each one of them allow you to come 1 month out of the year for $20 for the month, cycle through all 12 of them because you only paid $20 a month for that month. Go through as many free promotions as you can, or sale promotions. So when there's no sale, find someone that has a sale. But if you're committed to one firm and there's no sale, then you got to trade it seriously. You have to use your full risk management like it's a funded account. But the thing is, if there's a sale, there's a really special way to do it. You buy all 20 accounts when they're $20 or 80% off or 90% off. Buy them all and pass them all in one day, literally one day. Buy 20, full port all of them at all of your pivots that you find. Blow up 20. Who cares? If it's $15 an account at 90% off times 20 is literally $300. My one Tradeify straight to funded costs almost $500 for one account. Treat all your 20s, $15 accounts like they're worthless. Get them all passed in a single day. Like blow up, start over, blow up, start over, blow up, start over. By the end of the day or 2 days, you would have spent probably $1,000 or less, and you've got 20 funded accounts ready to go. Okay? That's your goal. To get them as fast, not just in one day, but before the sale ends. You want to get 20 accounts to funded, maybe not pay to get them funded, but get them funded. Consequently, I went out and buy, if I don't want to skip that step, I want to go straight to funded with Tradeify. I just spent $2,000. I just walked up and handed Brett $2,000 or $2,400, whatever it is, to get five funded accounts. So your goal is, if it's 15 times 20 is 300, you can blow up 6 times and still come in cheaper than buying 5 funded accounts. So if you do the 100K Apex accounts at 90% off, they're roughly $22. I say $15. $22, something like that at 80%, and $15 at 90%. So the goal is to realize it's how much you're just paying to get to funded. We all understand that, right? So when they're cheap, don't try to like, okay, let me just slightly grow the account to whatever. You're racing time. I'm usually 5 to 10 contracts when they're $15, and I either blow it up in an hour or I win the trade and beat the eval in an hour. And so you're not being stupid by just jumping in on a trade. Like if I have 4 or 5 pivots, I'm going to hit them all, reset, hit them all, reset, hit them all, and I can actually get 20 funded accounts for less than I go pay at Tradeify on the right day. So, and then from there, once you get them funded, then you take them seriously. Then you inch them forward like it's a real account. You're going to use, no more than 2 ES contracts on a 100K account. No more than 4 ES contracts. No more than 2 NASDAQ contracts per 100K. This is the rule. Max, this is your normal for funded accounts in your Apex and ETF per 100K. Okay. This is a rule that will save your ass. When you're funded, every 40 points on NASDAQ is $800 per contract. Times 2 is a $1,600 loss drawdown per stop. Every 10 points in the S&P is $500. So 4 times 10 is about 2,000. This limits my per trade loss as being roughly that. So typically those 100K accounts might have like 3,000 more of drawdown. This gives you 2 days to trade at max position. And I normally trade less than max position. So I usually gives me about, if I go on an unlucky streak of like 4 losing days in a row, then I'll bust the funded. But that doesn't really happen too often. So while I'm trading like 10 contracts on the eval to burn through it, I'm jumping right into my risk management once I'm done. The goal is to get 20 funded accounts before the sale is over. If you're paying full price for Apex, you're robbing yourself of the beauty of looping around through these things. If they don't have a sale, someone else has a sale. Come here and I'll tell you who has a sale. Somebody said agree, Matt Trader agrees. Does everyone else understand the math here? Your goal is just to get the funded as cheap as possible. You're racing to get all your accounts to funded before the sale ends. Because imagine 90% off means you get 10 tries for every 1 try you normally would get. So try as hard and fast as you can. I will kid you not, I pass all of my Apex accounts in a single day usually. If I'm unlucky, I'll bust them all and I'll try again the next day. I'll bust them all, try again the next day and get all 20. Usually 1 to 2 days max and I've got all 20 funded. And it costs nothing to do that. If you take your time, which is the appropriate way they want you to trade, if they don't have any rules about flipping or any rules about contract size, just burn it as fast as you can. Because if you take your time, the sale ends and then you're paying a whole lot. You know, you want to pay $200 for a funded account or for an Apex account at full price. Usually there's like a 50% off or something. You know, 200 times 20 is like $4,000 bucks. And you may not even pass. At that point, it's cheaper to go to Tradeify and just pay your way into funded, which is what I did. Like I said, $2,400 and I had 5 funded accounts. I'm already up $36,000 or something like that, right? Yeah, and then once you get through it, it's all meaningless because Apex will just deny you anyways. All right, that's the joke. The idea is that in the Apex or ETF world, the goal is to get them as fast as you can. Usually it's like flash sale ends in 3 days. Well, you got a 3-day race to get your 20 or get as many as you can. And then when you get 20, don't listen to what the influencers tell you to do. You're not going to get paid out in all 20. It's just not you. These guys spend so much money blowing these things up. They do the same trick, by the way. The trick is what your favorite influencer that you see on stream that trades 20 Apex accounts, they all do this. I'm just telling, I know what they do, and I'm telling you what they do from behind the scenes. You don't know what they do. For every 500,000 they get paid out, they probably spent 250,000 to get there. They blow up so much. Hold on. The low capital entry threshold draws most to FX. Oh, this is from, yeah, I appreciate that comment. I didn't even see my phone here. Friend of mine who is very knowledgeable in the Forex world and futures world was saying that there's a low capital entry threshold that makes Forex very attractive. I actually didn't know that because I don't trade Forex, so that's good to know. And by the way, nice to see you. And I hear some great things coming on from your world, buddy, and I hope you're doing good. It's good to hear from you. I've been following along. Arena spot to buy on NQ. The every single time trade for QQQ is here to here. But again, I don't have much faith in that because DD band is right there. So in all honesty, I don't think there's much to do from here. That's kind of the bad part. I don't really have an idea. So in general, what you have to ask yourself is to get funded, if it's going to cost me more. Okay, so let's do the math really quick. So this is kind of the rule. Let's go to Tradeify. Let's go to their front page. And to go straight to funded with Tradeify is by far, if you have the money to spend, that's what you should do. I'm getting used to take profits, so I'm going to see like what they do as well. Because I don't see. So their straight to funded is $7.29 per account. Okay. For a 150K account. I've got 5 of those. We also get 30% off. So it's what, 510, right? I don't know if my math is good on this. 3 with your 6, 14, 6, 20 through 2, 49, 51, 510. So 510 times 5 is I paid $2,500. Okay, that's how much you paid. So your question when you're trading any prop firm is, can I exploit the eval system to get funded for less than 25? So the standard benchmark right now, I don't know take profits numbers, but I need to go look at. But the standard benchmark is I can go buy funded accounts and I'll give Brett $2,500 and he will give me 5 150K accounts that are immediately funded. So if you're going to trade the Apex game at $20 times 20, 400, then what's telling you is that if you think you can come in under par, you can save money. But think about this, to fund 20 accounts at $80, which is the cost it takes to fund them, is $1,600 already. I'm sorry, did I say 4,000? 400, my bad. 400. So if it in just one round alone, if you pass all 20 and then you fund all 20, it already cost you $2,000. And then you have trailing drawdown. This is $500 more with no trailing drawdown. Like, does this make sense to everybody? Now, it doesn't have uncapped payouts like Apex does, but they also aren't rumored to have hidden rules. And I've heard from everybody that's why it's the hot elephant in the room, because everybody is singing the praises of Tradeify. None of the influencers I know have complained about their payouts. They all are singing the praises. And I'll be the next to sing the praises if I get paid out on the 11th. So does everyone see that it might seem like, $400, 20 times 20. The only difference between the two at this stage of the game, when you look at them side by side, it is worth every fucking penny to pay $500 to remove trailing drawdown. Oh my God, $100 extra you're going to pay? So to get 20 accounts funded, 100K accounts with Apex with a 90% off sale, and then you pay the activation fee, you already paid $2,000 for all 20 of your accounts. But you're paying $2,000 for trailing drawdown and uncapped pay, which is good, bad and good. With Tradeify, you're paying $500 more for capped pay, but no trailing drawdown. Your success rate will be 5 times or 10 times better without that trailing drawdown. That is the squeezing of traders. This, if you're struggling trading, do this instead of this. This is slightly cheaper and expects you to beat it in one go, because your second go, or two, you only get 2 chances. 400 plus 400 plus 1600 is 24. If it takes you 3 attempts to blow 20, it's already cheaper to go to Tradeify. And are you going to pass it with the trailing drawdown rule? It is very hard to do that. So the real difference is when you put them tit for tat, do you want to pay slightly more for uncapped payouts with the trailing drawdown to a degree, and then the trailing drawdown stops? Or do you want to remove trailing drawdown altogether and just pay a little bit more at the start? To me, that was the obvious choice. And Apex will only uncap you after 3 months, by the way. It's not fully uncapped. So when you assume that Apex is capped right for your first so many months, then all you're thinking is you're paying slightly more to remove trailing drawdown. $100 an account, tit for tat. I would pay $500 per account to get rid of trailing drawdown. Are you kidding me? The success rate goes through the roof when you remove that rule. So Brett understands that when he priced his things. Like, you don't understand that it is a steal for you to pay just $100 more per account to remove the rule that increases your failure chance by 10x, I would say. 5 to 10x. Literally 5 to 10x. You know what I mean? You get so much buffer in your account in these 150K with the $6,000 end of the day drawdown mark for 100 extra bucks per account. You know what I mean? Makes sense. It absolutely makes sense. Like, in the way that it works, I don't see Apex surviving the new school of straight to funded accounts. I don't see them competing. Take Profit, and now Take Profit I'm going to learn all about as well. I'd like to learn more about them so I can share with you guys my experience with those guys. My goal is to dedicate some of my time to each one of these firms and give you guys an honest review of them. So I've received the payout from ETF, no question asked, no problems with them. So ETF gets my double thumbs up. They are slightly harder, but they're on the Apex side. They're cheaper. Their 23% drawdown rule absolutely sucks. I hate it. They had the other drawdown. I hate those consistency rules anywhere I go. Tradeify is 20%. I hate it too, but it's part of the game. You got to play around it. And you're also not guaranteed to pass all 20 evals. Yeah. And so when you get funded with 20, don't listen to what your guru says. They might get paid out in all 20. I think I think it was Austin Silver that I heard talking about it. I think he said something like, get funded in 20 and get paid in 5. And that's very powerful because that's kind of the truth of the matter. When you say get paid in 20, get funded in 5, it's telling you a lot without saying a lot. What that means is that you spread your risk out. Don't trade all 20 of them together. Like if you have 2 really strong pivots, imagine you have 3 really strong pivots and you have 20 accounts and you want a long because it's a really strong long day. Long in 5, long in 5 more, long in 5 more. Split up your accounts. Because some of them are going to make money. If it dips, you might blow these, but two of these lift you up the trailing drawdown threshold that then locks you to a static drawdown with many of these accounts. And that's what you're aiming for. You're going to use some of these as your pawns in the game, and this is your knight and this is your queen. So when I tell you that, I think it was Austin. I think I heard him say that in one of his things. I thought it was such a beautiful thing to say. I don't know if he realized how beautiful it was, but maybe he did. He's a smart guy. So like, get funded in 20, get paid in 5. What it means is you're spreading your risk out. You're not trading all 20 at once. Expect to blow a few of them up when you don't blow others up, which means you're using your accounts as DCA mechanisms, meaning that I'm using my account to spread my risk here, here, and here. And that's a really, really smart way to do this. 1996 to 2000 with the internet and the internet stocks. Crypto is still new. It's volatile until it isn't. And it's volatile until it has utility, just like the internet. The internet in 1996 was a place for you to go online and chat with people and read the news, and people thought it was a gimmick. In 2020, the internet delivered doggy wipes to my house this morning. It delivered sexy lingerie to iDoc the other day, and it delivered Taco Bell to my house last night. I don't have to move a muscle because the internet. This is why the internet's worth so much money. In crypto, until it becomes like that, it's not going to have its heyday of its real value. This is baby value in crypto. If crypto becomes something, we can do anything with it. But Kulo, think of this though. Remember, the initial cost that trips everyone off. Yeah, $400, but then it's like you have to pay $80 per account to activate them. So in reality, at minimum, it's $100 per account. Plus $20 each time you start over. Don't ever reset, just make new accounts. So like if it's $20 plus it's 20, 20, 20, 20, when you pass, it's 80 onto it. So it's basically 100, 120, 140, 160 each account. Lingerie. I was just trying to wake you guys up. Buy one, tradeify 150K, get paid, and then buy some more. Yeah, that's smart. Perdia Capitals, I've never even heard of it. They're straight to funded program. Woke you guys up. Apex is profits from the activation fees. It does, and that's where the activation fee is the model that crushes you. Like I said, I don't see any flaws in the straight to funded model with end of day drawdown. I don't see any flaws with it. Cat payouts is it. You can only milk that. It's actually cheaper than you think. I'm going to milk that system as long as I can till Brett kicks me out, and then I'll take whatever I can take. So, can you trade Tradebait and Rhythmic at the same time? With like, you can if you have 2 different platforms. Like Rocket Scooter doesn't connect to Rhythmic, but like you can elect to get Rhythmic data in one platform somewhere else, and then you can just trade in 2 different platforms. Like with Rhythmic, you can use our trader for the Rhythmic data, and then you can use Tradevate for the Tradevate, or TradingView for the Tradevate. Where the market's going from here? That's the likely path. But there's expanding volatility, and I don't trust that there's upward momentum from here. But I also don't think there's a sell-off. There's just really nothing to do. Bullnox code. I can try. You guys give me a list in chat. Send me some like names of people you want to get codes for. But I'll tell you, when it comes to like the cheaper ones that are easier to pass or harder to pass, I would say I choose ETF over Apex. It's a lot more no hassle, I think. But barrier entry still high for straight to funded. Cost per drawdown. Yeah, that is a calculation for value. That does make sense. How much cost per drawdown? But also you have to give bonus, like multiply end of the day drawdown by 10, because I believe that trailing drawdown kicks you out 9 out of 10 times. I think that's like 90% failure rate. I made a Blue Sky account to enter their trading competition they were having, and then I realized only 20 people entered it. And the people that were entering it had like 5,000% gain in the single day, and I realized it was a scam, the contest. So I didn't use their service. It didn't seem that big, but I don't have any information to say whether it's good or bad. I'm sure it's good. But the trading contest, people with thousands of percent in a single day is not. There are people high frequency trading, exploiting the paper feeds. That's a paper trading trick. Bullknot's only problem is that they're only rhythmic. So rhythmic works well with Trades by Matt's platform, I believe. So Tradester, Matt made a platform called Tradester, which I think works with rhythmic. I would ask him if you can trade your rhythmic accounts through his thing. I think you can. Because I think he said his thing works with rhythmic. Don't quote me on that, though. ZTF have a trailing drawdown. They have both. You can pay for the end of the day, or you can do the trailing drawdown. And the end of the day, it costs a little more, but I say it's worth every penny. I think the failure rate of trailing drawdown is like 90% of all fails is the trailing drawdown. Because you either get the trade wrong and you hit the drawdown, or you get the trade right and you hit it. Very few traders, I get that's the rule that gets you. Ultimately speaking, that is the only rule that gets you, because that's the rule that cuts you is the daily loss limit of the trailing drawdown. So whether you win enough and they keep in the game longer, trailing drawdown is a ticking time bomb. Your drawdown in general is your ticking time bomb. And if an account is allowed to be static and like give you some bump, somebody talking, what's going on? Who's talking? Let me get the news up here. What's going on? Where's my news? Where's my news? Where's my news? Somebody saying something? What's going on? I don't pick up pennies from a steamroller guy. Bob is selling off. Trump will not speak with she today. Okay. Trump farted again. Here it is. Let me check Twitter. This is 10 minutes ago, but I don't think this is anything new now. This is old news. Trump wants to do its 22.5%. Across the board tariffs that are 2.5% in general. This is old news. I don't know what's happening now. And nothing happening now, but this is insane volume. Buyout offer accepted by 20K. Wait, for TikTok? Is that what it is? Wait, buyout offer for what? There was a bear flag. Oh, you stop it. Oh, the Fed employees? Oh, okay. Tick trader. Did you miss a trade? No, there's no setup. No, nothing to do. There's no setup. Let the market fall. Let her fall. Don't go in and risk it all. It's about the Fed layoffs. Oh, yeah, probably so. Could be. Trump is no longer going to be speaking with the president of China. So when were they going to speak after all? So they called it off? Well, that's... Remember, I had... What did I say this morning? Hold on. Wait, hold on. What did I say this morning about my feeling about today? What did I say? Can somebody repeat what I said? I felt a certain way today. It wasn't that I felt... It's like I felt... This is where I should get in. I felt a certain way. Does anybody remember what I said I felt? That they were supposed to have a call today and that the market's going to move until something is said about tariffs with China and then it's going to dump. You guys remember when I said that? There's no feelings in trading on when you get in. I had a tingly feeling that something was going to come as a resolve of the tariffs. Either we were going to announce that we were going to talk or not going to talk, and that the market was just waiting to hear something about that. So why I don't pick up pennies in front of a steamroller, not that this is bad, it's only 50 points on the NASDAQ, but the thing is why I don't believe the short squeeze in Alphabet earnings while we're waiting to hear if we're going to resolve with China or not. I've traded Trump long enough to know my spidey senses were tingling, like I can feel the buzz of some kind of tension of we're going to have some kind of tariff something today. Now, again, I didn't chase so long. I didn't do anything. I'm still chilling. And I called it. Trump market. This is wild. You had a feeling for tariff announcements on the air. William, how are you enjoying? By the way, William, welcome to the group. I'm so glad you joined, buddy. So are you enjoying the classes, enjoying everything that we've been teaching? Since you've been in for a couple days. How you liking it? My tarot cards, man. Catch dip. That's not... Nah, I wouldn't touch it. That's not today. Oh, no, not today. I did call it. But it's not because I'm a gifted anything. This is... I've traded Trump long enough to know. You know, it's like the market's just squeezing on the hopes that they're going to talk it out. And then when he says, we're not going to talk it out, market dumps back down. You don't go into possible Trump tariff talk buying for breakout rallies. You just wait for him to say something bad to give you a dip, and then you go long. I did this for 4 years very successfully, by the way. It's a great strategy. Like, again, it could rally up to the top from here. I'm not saying it won't. What I'm saying is, like, I'm not in the trade to be upside down that much. I've been doing this for a long time, you guys. Long ass time. Do y'all like my this is my quant? Trump tweeting. This is my quant. Your what? My quantitative. His name is Xing. He won a math tournament in China. Look at him. He doesn't even speak English. He's like, actually, my name's Chang, and I do speak English, but he thinks it's better if I say that I don't. You remember The Big Short? Come on. Y'all have seen the movie? And actually, I got second in that math tournament in China. Triple B's, dog shit. Double B's, double dog shit. A's, dog shit. Notice anything about him? Yeah. What a funny movie. I actually really love the movie. Okay. So anyways, let me see what I wrote. Look. Jokes aside, I did make a joke. And I said, like, basically, hold on, where did I say it? I said, lots of tariff experts Born last few days. People calculating PCE and doing math and all that, saying bear market, blah, blah, blah. Look, trading Trump is easy. Don't overcomplicate. This is a meme and it's a joke, by the way, but it's real. He'll say something bad and market down a lot until he'll say, never mind, market back up. And between now and 2028, market will be way up because he'll say something good when the market's down until it goes up because he wants it to go up. Source, been there at 2020. When you know that we're about to threaten tariffs with somebody, let the news buy you the dip that you want. When the market's rallying in the tension or short squeezing in the tension of the move up of we dipped and now we're squeezing into earnings and there could be a call, just imagine that the market's gonna be sensitive to it. Now, again, this might rally right back up to the top. I'm not saying that it won't, but the idea is why I'm not inching my way forward. After I didn't take this long, I just kind of waited. I was expecting some kind of announcement to come out earlier rather than later, but the intuition of I've been there for 4 years, I remember what it's like. You guys are going to pick up on that wisdom from me because y'all going to remember what it's like. You know what I'm saying? So, the quantitative. This is my quant. I do all my market research around Trump's tweets. Now, the announcement that they're not going to talk is Chinese have put a retaliatory, I think, was it 10% tariff on U.S. energy and farm equipment. Again, that doesn't affect all industries, but it creates the atmosphere that we're going to enter a trade war. And I'll tell you from somebody that's trading 2016 to 2020 live on stream, I was doing oil earlier at that time, is that tariffs, market do not like tariff talk. The tariff will pass the price on to the business. The business will either A, eat the cost, or B, pass the cost on to you. Either one of those is bad for the bottom line of that business in the short term. In the long term, the business creates a new relationship with an American company and gets better prices, supports American business, and GDP goes up, and everybody wins in the long term. In the short term, the stock market hates that news because the next quarter's company earnings are either going to be they have to eat the cost and make less profit, or B, they pass the price to you, and therefore you go shop at their competitors and they make less profit. A tariff, in both cases, in the immediate quarter, the company will lose profit. So farm equipment and oil companies will lose profit, knowing that tariffs will be there in the first quarter. And the stock market's just pricing that in immediately, and also pricing in like PC and stuff. But in general, that's kind of what the drop comes from, because the tariff can directly impact the overall GDP, everything. You can people can calculate. These quantitatives can figure out how to do it. So my thought is that whenever we're talking about tariffs, don't pick up pennies from a steamroller. Let them dip the market to where you want to go. Trump doesn't want the market to crash, so let it hit your supports and then take your trades. Like, market's just squeezing. I'm like, well, fuck this. Let me wait. And that was a smart decision, right? Tariffs are a backdoor tax on the American people. Sometimes, yes. Like there's a seesaw, and you're right. At the front end, if the company passes either all or some of the cost to the price of the goods, here's the thing. Here's the good, and the company has to pay 20% more for the raw material, and then that 20% adds on to the final price 2 times over, right? Because you double your cost for distribution, double your cost for retail. It adds up. So the goods price may go up a little bit, but a competitor that sells that thing that doesn't get a tariff doesn't raise their price. Customers will flock from one product to the other because of the cheapness. Therefore, this person will lose market share, and therefore they will no longer raise their prices because the competitor that doesn't have the tariff won't, and therefore instead the company usually eats the tariff. Yes, on paper it is a tax to the American citizen who is buying that good, but because of competition, the mutually assured destruction of both people raising prices will send, if 2 people are raising prices, will send everybody to the competitor that doesn't have the tariff. So because you are locked in with competition, you will not choose to raise prices and lose market share because people are loyal to a thing. It's the phone service philosophy. Once you buy an iPhone in 2008, you have probably had an iPhone up until 2025. because it's very, very hard to switch your loyalty once you're locked in. Once you pick an electricity provider, for the chances are you're not out there shopping for rates every year unless you really go overboard with it. You're usually locked in. So if they lose market share to a competitor because of a massive price difference, it usually prevents the company from passing the price to the consumer and instead themselves eating the loss so they don't lose their market share. So it is a backdoor tax onto the people. If they pass the prices on in competition, usually prevents the full effect of that happening. They may raise prices a little bit. They'll usually, the company eats the cost, which is why Trump said, yeah, sometimes. Because it's true. Mathematically speaking, if I'm a business owner, inflation, actually firsthand experience, inflation came to Rocket Scooter. All of our costs went up since 2021. Our company became like 30% more expensive to run. And I didn't raise prices at that time. I did now, but when you do, I took a hit in business. You do. People don't want to pay a lot when there's inflation. So the consumer will likely force the company to eat the loss, which is good. Over time, if this company in this boat, now here's the other part where it can be good. So it's bad if they pass the price on to you, and it will pass the price on to you if all the competitors and major competitors are all experiencing the tariff. So in the chance you have a competitor not experiencing the tariff, like they build American, then they're going to steal your competition, and you got to prevent that. But if you and everyone else are a manufacturer and the top 5 in your industry, like the big 5 or whatever, all are importing and all have the tariff, then all will raise prices. And in that instance, with no competition that's local, everyone, it's a consumer, will feel the tax. Yes. So in the case that you have tariffs against somebody that doesn't have tariffs, what usually happens is they're going to raise the price maybe a little, if at all. They'll probably, instead of raise price, just raise it a little, and they'll eat the hit. But what they'll do is they'll work out a new supplier that's local so they can get a better deal. It's slightly more expensive to do local instead of foreign, but it's definitely less than 20% more expensive. And therefore, what that does allows them to keep prices low and not take the hit. And who they hire locally is usually somebody in America, and they're going to create tons of revenue for another American company, which can hire more people, which is likely American, which can hire more people and likely American. And the choice of tariffs on foreign countries has the supposed domino effect of increasing the GDP as a whole, which is more money for people and less lending standards from banks, less strict lending standards, and the economy just technically can grow on paper if that takes place. Now, who's going to rush out and go get American suppliers overnight on a 20% tariff? I don't think that happens quickly, if it happens at all. But somebody says if you choose a cigarette brand, you're a customer for life. Yeah. So the bet that Trump is taking is that the tariffs will force companies to do business locally, which improves the GDP, lowers the unemployment, makes risk of unemployment lower so banks can start giving out loans much faster, and we can stimulate the economy that way. And he's not wrong. The problem is that if local suppliers cost more than 20% tariff that you take, the companies will just take the 20% hit and say, well, it's a huge hurdle because they're locked in the cigarette rule or the cell phone rule just like we are. Man, I've had this supplier for 20 years and they're great. They never failed me once, and it's risky to go somewhere else just to save 10% because it's going to cost me 30% to move to avoid a 20% tariff. It's 10% more expensive. I might as well just eat the tariff. And I think the final result of tariffs is going to be the companies just take the hit and don't really raise prices much. We're still hyper competitive for market share in this world. So I don't think we're going to experience the tariffs as consumers. I'm going to take that bet. I don't think the tariffs are going to raise prices for you because there will be a rapidly growing trend of made in America companies spawning up to make anything. Tired of the Chinese tariffs, tired of the Canadian tariffs? Well, we're all Americans. Support this brand. And people will build that story on Instagram and sell you stuff that way. There's no way the business is eating the cost. That's not how pricing or good service is. You pass all the costs to the consumer. But you wouldn't do that if you have a competitor that is all local. If I go to the store And I've got local maple syrup and Canadian maple syrup. I'm just making a joke about Canada. But one of them is $4 a bottle and the other one is $9 a bottle. It's maple syrup. As a consumer that's cost savvy, you're not loyal to like commodity and food brands and whatever, things like that. You don't care about your energy. You don't care. You're loyal to like maybe your clothing, maybe your cell phone. There's certain things people are loyal to, and there's a lot of things people just pick the cheapest thing. People that buy store brands, right? They're going to pick the cheapest thing. And so if you have one competitor that's local that doesn't have the tariff, then their goods are 20% cheaper, if not better. And so, you know, or maybe slightly better. If you raise your price, you risk losing market share to the cheaper competitor on certain types of goods. So as a business owner, that's what you have to understand. Certain things, like, people don't have brand loyalty to, like batteries. Like, you care that your battery's Duracell? Not really. A battery is a battery to me. I don't buy into the hype. It's just a battery. I buy Amazon Prime batteries, right? Certain things I don't care what the brand is. Certain things I do. Like, you know, I only buy American sliced cheese that's Kraft only. Everyone else tastes weird. Because Kraft is better. But like everything else that I buy is relatively, like, I usually just choose the more affordable option for a lot of stuff. Inflation will be caused by wage inflation, not tariffs. I agree with that as a major mechanism of inflation. Wage inflation is kind of like the problem we originally had. But in general, I think inflation is going to come down. I don't think we're going to hit a period of hyperinflation. Tariffs may have an initial hit on that. But right now, with the supply of labor, like jobs, that, you know, the jobs market is hot. So the wage inflation is going to be a result of companies needing to hire faster than the labor market can supply people, which is kind of the environment that we're in. Wage inflation is a huge deal. But we don't have a lot of the other cost push inflation factors like raw materials and stuff. Costs, they're not high anymore like they were in COVID. So I feel like inflation is going to come down naturally over time. Oh, shit. Hold on. Reboot my platform here. Hold on. Let me reboot this. Give me a second, guys. But the price, like, I'm thinking as a businessman's sense. The price, you have a choice as a business on do you raise your prices or not. And that's completely up to the type of business, and every business is going to have a different handle of that. As a business person, most of your battle is building loyalty to your brand. The last thing most business owners will want to do is have disloyal customers, because customer acquisition is one of the hardest parts of business. Getting you guys loyal to Rocket Scooter, it's one of the hardest part. Get you to see the brand, like the brand, engage in the brand, and stay with the brand is hard as a business owner. And it's like, if I had the choice of, do I just eat 20% of the cost or risk losing people to my competitors? In my world, I don't want to lose people to the competitors. So, like, you know, it's going to depend on the type of product. So it's going to be like, let me move the mic forward. Different. You are not wrong, Kulu. The cost of manufacturing in the USA might be much, much, much more than the 20% tariff. So companies may not be incentivized to switch. Correct. But there are other import companies and companies in other countries that are cheap and don't have the tariff. See, we're just talking a handful of countries. It's not like it'll stimulate businesses to build American. It'll stimulate businesses to move to another cheap import without a tariff. So that's a lot. So new logistical chains not necessarily are going to go American. But if Trump initiates tax breaks to companies who have American suppliers, he certainly can stimulate it that way. And I always speculated that that would be the next step. Once we secure strong tariffs with a lot of countries, all you got to do is offer tax breaks to build American. That would be great. That'd be great for the American economy. I always feel like that's the master plan. Here's his master plan. Get illegal labor out so that everybody hires American. Get all the foreign countries out so everyone builds American. And then give American companies tax breaks to build American. I always felt that that was the final step of his master plan that he hasn't talked about yet. But once I'm speculating now that that's the last piece. You know what I'm saying? It only makes logical sense. Get rid of the cheap labor so we can support our own citizens. Get rid of the imports of cheap imports so we can support our own manufacturing, build American jobs, and then reward companies that do so. Instead of leaving China and going to another country to get your imports, we'll give you equivalent tax break, which builds American if you stay locked in for X number of years or whatever. I feel like that's the next step. And if that is the next step, I'm in the boat that that's actually a really good thing. That will lead to you all getting better salaries as the demand for your labor will go up. You'll get slightly better salaries. The price of goods will become more expensive, but you'll be making more money to be able to cover it. In a weird sense, the math kind of works if that's the case. If you're just forcing everybody to build or buy American or make American, it's not going to work unless you give the company incentive to go American. If I can't do China, I'll just move to Japan. If I can't do Japan, I'll move to pick another country. You're not going to force people to go the American route unless you give them tax breaks. And I think that's where they got to go. But I'm usually good at calling this stuff. We'll see if I'm right. We'll see. Are there really no jobs in America? There's a lot of jobs in America. It's just that look, I'm a person that hires programmers, right? I have actually 3 programming teams. But basically 2 major camps. I've got people from other countries that work, and I have people from the US that work. My US team takes a certain type of programming work. My team from India and UK, so they're split in 2 different places, but they take a difference. So they do 2 different jobs here. One of them is like 9 times the price of the other for roughly equal quality of output. Their technical competencies are different slightly, but as far as skill set and being talented, they are both like relatively equally talented. If you were level playing field, no difference other than cost, which is why, like in the instance of programming, you guys know anybody from India or anybody from Ukraine is a very popular place to hire programmers, very, very talented people. But the exchange rate for labor is very inexpensive for the quality you get. Quality is great. And that's why people do it. So it's like the incentive for me to hire an American programmer is very simple because I have certain things that I have to keep local, like proprietary stuff I have to keep local because I don't have any jurisdiction in India. If my stuff gets compromised, I could sue that company if they mishandle my code or something like that. So there's a reason I pay the premium here, but like tit for tat, if it wasn't proprietary, I wouldn't be hiring American. There'd be no incentive for me to do that because it's the same quality for 9 times the price. So certain companies will have to make a similar decision. And it's just that American labor is just so expensive, cheater. There's tons of jobs here and there's a hot job market and people are getting paid so much money because there's a hot job market. It's really expensive to do business with our own country. That's kind of the place. That's where we're at. Elon is shrinking the government as we sleep. Yeah, dude, he's running the country like it's a startup. It's so funny. It's so funny to watch Elon run the country like a startup. Hiring like kids right out of college, these genius programming kids. Like these kids could do like low-level kernel modifications and they're like out there, doing the math to reduce the federal budget and things like that. It's hilarious. It's like the early days of Facebook. If Mark Zuckerberg and his friends, living in Palo Alto or wherever they lived, are like sitting there and just like, reworking the federal budget with math equations. It's hilarious. He's sleeping in the office. Oh, I bet. He said he wants to lower corporate tax to 20 or 15 if possible. I am 100% in the camp that tax breaks for American made is the next step. I think that's a beautiful step to incentivize people to support each other's local business, because that just brings the GDP right up. He's doing everything he can to eliminate tax at the federal level and just make tax on purchases, which is tax on commerce. You just pay tax if you do work and buy stuff, and which is good. Make stuff or buy stuff, you're going to pay tax. And instead of taking your labor from you, you're only taxed if you decide to spend it. So you're not taxed if you go to save. What that does is it gives like the working class person almost the same tax break as a rich person that doesn't pay capital gains taxes because they write off their losses and stuff. Well, if you choose to save your money in a bank account, you're also not taxed on it. I think that to get rid of federal income tax would level the playing field between the rich and the poor. Think about it. If you only are taxed when you spend your money, it's just like you're only taxed when you sell your investment gains. Right? So if you just choose to hold on to your investments and they gain value, you're not taxed on it, right? In that particular way. And so I don't know all the tax code things, but the idea is that you're only taxed if you sell or buy or transfer, right? So in the idea of not having federal income tax is that you're only taxed if you buy something. It almost makes it to where if you're scrimping and saving, your goal is to save, you have the ability to build wealth by saving as somebody with low income. I think that's, I know I'm just kind of like drinking the Kool-Aid, but like I see the bigger picture as an incredible thing for the wealth gap. So if you choose to go out and spend money, you're going to be taxed out the wazoo for it. But if you're choosing to save, you're not taxed until you spend it. I think that's kind of cool. I almost envision a world where that's better. Over 20,000 federal employees have retired already. Isn't that crazy? Minton Delta says, sometime down the road, companies will start to be penalized for that thought process, choosing non-American in different economies to do American work, especially in tech. Yeah, like I think that is the case. Like, it would be insanely expensive if the majority of our work here was not outsourced. It's hard for a startup to support American labor without capital infusion. It really is. Most all my employees are American, but in the programming world, most of them are not. Trying to imagine what insane meltdown the MAGA crowd would have if Kamala won and George Soros doing what Elon is doing. People would implode, yeah. So he's talking about 20% income tax. When you spend, we will be paying way more. But the thing is that you're only paying, well, if you're only paying if you spend, that's not a big deal. I mean, like states like Texas don't have a state income tax. If you only pay 20%, that's much better than 30 to 40%. When you add the tariff cost and you add your sales tax on everything, you might come in relatively flat or neutral. But the thing is, you're only taxed if you spend. And certain things don't have tax. Certain things aren't taxed at the state level. Like food, like essential items aren't taxed when you buy them. You know that, right? You guys know you don't pay sales tax on food, right? Like, not snack food, but like Coca-Cola and chips you pay tax on, but cheese, bread, milk, you know, you don't pay tax on that stuff. You don't pay sales tax on any of those things. There's a lot of things that the state doesn't take sales tax, like necessary items to live. I learned this when I was 16 years old working at a grocery store. You pay taxes on alcohol. Hold on. Where are you going for lunch? What's that place again? Oh yeah, Italian food. Yeah, I'll send you the menu. Sweet. Oh, you look nice. Really? Yeah. Everyone says hi to iDoc. Hey, what's up? All right. See you later. Have fun. Oh, so why would I hire a programmer from the UK? So one of my programmers is residing in the UK for university. He's from India though. So when I say they're split into two camps, he's an Indian national, but he's going to Oxford. I forget the. I think one of the. He's very, very talented. He's getting his PhD. Is your hot wife single? She realizes she's with a really big nerd. She probably will be one day. I'll give you her number. But either case, right? There's all this debate on what tariffs will or won't do. I honestly just think that it'd be kind of cool if you don't tax people until they spend, it gives people an added choice to do the math. And I don't think we understand how we can benefit from that. I think right now on the surface it's hard to, but as I know people, they always figure out a cool way to exploit something. If you don't spend, or if you're not taxed until you spend, it's going to incentivize people to save and not be penalized for saving. And so it might create some kind of dynamic that we don't understand yet. I always thought it was kind of hard to take money right. I always disagreed with federal income tax in general and would rather support a federal sales tax because it allows people to build more wealth quicker to make the purchase, right? It takes less time to save up for a car if you have 40% more of your money every month. Now, you're going to get taxed the minute you buy the car, maybe equivalently so, but over that course of time, the extra money you saved in general can accrue extra interest from investing over the time that you have it. So therefore, you can overcome some of that tax burden by having more money to invest, which makes more money. And theoretically speaking, people can buy bigger ticket items faster, which can only stimulate the economy in theory if people are smart with their money when they save it. So like if I were to say, aha, I'm gonna get somewhere 40% faster because I save 40% of the money right now, then I can put that extra 40% into the stock market and make 10% on it in a year. So while I get taxed at the checkout, my tax burden is even less from the capital gains I made. Now the capital gains are taxed, but they're taxed much less, right? So is it good? Is it bad? It's hard to tell until we see it happen in practice, but it would incentivize saving and also bring people out of poverty who are struggling to buy food, because a lot of food isn't even taxed, but their income is taxed, so therefore their food is taxed. This is where I believe, and don't call me a hippie, but I believe it's great for that subset of our population. Because imagine when you go buy a tax-free apple from a store, you did pay 40 or 25% on that, maybe via low income or whatever. But imagine if you weren't taxed at all buying food. Imagine how many people would be yanked out of poverty with that one choice. Does this make sense? Am I talking bullshit, or is this making sense? I'm just thinking of the people that are barely making it. That's huge for them, I would say, unless I'm missing something. So not all goods are taxed, right? So certain things that you buy aren't taxed. Like I remember when I worked at the grocery store, milk, cheese, eggs, things like that. My state didn't have sales tax on that. I know it's a state to state thing, but my state didn't have sales tax on food. Only things like alcohol, cigarettes, and snack foods, like non-essential foods, chips, candy, Coca-Cola, that would be taxed. But essential foods like raw grains, rice, milk, eggs, flour, sugar, these things didn't have tax on them. So the essentials for people to buy food and cook food is one of the biggest hurdles that people are struggling, having to pay a lot of money because of inflation, have to pay a lot of taxes. So I feel like that kind of program would be good. To me, it always makes sense. You could talk all day about anything and I would listen. Also, my wife says, well, Matt, your first date. Apparently she liked it. I don't know. I just like to speculate and guess and dig for an answer. I don't really have a bias. I just like to dig, and you guys are really smart. I like bouncing ideas off of y'all. And income tax in Canada was to be temporary in war times in 1917, and it's still around. Then I'd walk in with the sandwich Insert sexist joke here. She actually makes me sandwiches all the time. It's really funny. But she does that because she knows she makes a better sandwich than I do. And she always says she always makes the best sandwiches. Essential food like avocados and maple syrup. Can you imagine buying some property and they hit you with the 25% income tax? Right? Like I haven't really thought about how it's going to affect like the middle class or the upper middle class or big ticket items. Like will your car become more expensive? Will your house become more expensive? Like what are the implications of that? And that's really hard to think. The only thing I can wrap my head around right now is that people that need the essentials will likely be in a better off spot. It makes it less of a welfare state. And I'm gonna kind of stick by that being a good motivating factor for that. Like you have less people in need because your needs are met. And I think that like it's as crazy as it sounds, we always thought like the Democratic position was always like for the people and give social programs to the people. But like be able to understand, I don't think I see it any other way, is that no federal income tax is a tax break for the people, for the lowest of income. The people that need the tax break the most, they can finally get by, and their food bill is 30% less. Like these are the people that can barely afford food, and this is like it's less people relying on the government. It's a mode of government efficiency. It's less people needing assistance from the government, I would say. Now, for you and me and everyone else, the people that are fortunate enough to be slightly more well off than the next person, it might cost us a little bit more to buy stuff. And how do I feel about that for me? I don't know. I can't wrap my head around how much it would cost. So I don't know. Vermont grade A light amber syrup. Who needs Canada? LOL. Hey man, when it comes to syrup, you got to buy the real thing. Don't buy that, brown food coloring, corn syrup, maple flavored bullshit sauce. You need to buy real sauce milked from a maple tree. Okay? Real maple syrup, there's no substitute. Like literally, you got to buy that imported Canada stuff. You got to get the organic imported Canada stuff from the literally like the one organic maple tree in Canada and buy the $40 syrup bottle, the extra dark. Oh, dude, there's a world of difference in that flavor. Victor from Germany, and you don't understand a lot of political stuff, but I know the next 4 years will be difficult trading the markets. Yeah, just let Trump move the market around and buy the dip. This is kind of the rule. Trump will bully people around. They'll usually buckle. And if the market falls too much, he'll pull back because he doesn't want the stock market to crash under his belt. This is a pride thing for Trump, and you must trust that he don't let the stock market fall. He will say something else to get the stock market to rally. So you got to believe, I've traded Trump long enough to know that. And Cheater's correct. This is going to cost a lot of money and time to implement changes, and it's going to be slow. So all this talk is not like an overnight thing. But did Elon go over to the Federal Reserve? There's 30K people working over there. He's going to go like Twitter, right, and eliminate 80% of the workforce. Do you remember when Elon had that interview with Tucker Carlson? And Tucker was like, how did you lay off 80% of Twitter? And Elon goes, well, it turns out that you don't need 80% of the people we had to run Twitter. And he goes, I don't understand. How is that? And he goes, well, if you're not what was the words he used? He's like, if you're not like a political, social hack or whatever he said, like if your job wasn't to create censorship and buckle to politics, you really don't need 80% of the people that were at Twitter. That was a jab, and that was cold as ice. He basically bought Twitter and laid off all the people that didn't like him. But that was kind of funny. Gotta make sure it's gluten-free. What was that one thing I was making that joke that one time about gluten-free pork or something? I went to some store and it was like gluten-free beef. I don't know, it was something that meat, and it was like gluten-free on the box. I didn't understand that. Well, they put like sawdust in it or something? Like, what the fuck? It was pork. It's like gluten-free pork. I didn't understand that. Or something. I don't even know. I literally I was joking about it on stream one day. It said iDoc and I went to the store and we were looking at it. It was like gluten-free whatever. And we were like, gluten-free pork? I don't get it. Maybe that's just like, they just want to use it as a marketing term. They'll sell more of it. We just say it's technically not a lie. It's gluten-free. But I was like, huh? But hey, I mean, it's technically the truth. I don't know. The Fed is now gluten-free right now. Or it's Fed gluten-free. Oh, well, maybe that's the case. Maybe for people with celiac disease, you are that sensitive. The meat you eat was fed gluten. I don't know. That's maybe something I didn't know. Did they just say that for the ads? Maybe so. Maybe their correct technical meat is gluten-free, 100% marketing. Maybe it's just marketing. I don't know. Is there Vermont maple syrup? Is Vermont maple syrup actually the better kind? That gluten is transitory? LOL. Okay, so yeah, no real trades today. I don't really see much to do here. iDoc's texting the menu. She's got the world's greatest job. You know what she does? She used to be an eye doctor. Well, she still is, but she doesn't practice anymore. She works for a pharmaceutical company as they hire eye doctors for part of their research team. They fly her around the world. They give her money to eat every day. They give her money to take out doctors to eat at fancy restaurants every day. They let her take fancy Uber Blacks everywhere, pay for her flights, pay for her hotels. She just spent a week in Hawaii. She's about to spend a week in Chicago. Look, this girl is going to a fancy dinner right now, lunch with the doctor, don't have to pay anything. I kind of want her job if I ever have another job. She's like, yeah, I got to go to Hawaii for a week for a conference. And I'm just like, that is like the luckiest job in the world. She's an eye doctor. Can she see what's inside of cinnamon toast? That's true. I got to ask her that. All right, guys, a little bit of market volatility after Trump news. I really don't have anything to say about today's setup. I don't really think there's anything. We have Alphabet earnings after market today, so just be careful. I think the market's going to inch its way forward, but still, I don't trust breakout rallies from here. I do think that it's very possible that we do more of this nonsense because of the tariffs. Just be careful. We have volatility. We have things kind of split a certain way. In the monthly maps, it just shows the market's not happy with where we are and how we're going. So be very careful today. I'm not picking up long pennies in front of a steamroller. You know how to trade Trump. Let them produce the dip and then take the long on the dip. That's what I always like to do. So today was good. I think I'm going to call it. I love you guys tuning in every day. Don't go anywhere yet because I have some deals and announcements to tell you. Okay. Not every day is a trading day. We just chilled today, but we had a huge turnout, which I love. Thank you guys for tuning out and supporting the stream. It really makes me happy to see you guys supporting Rocket Scooter. We have our boot camp for $20, literally teaching you trading. Market avoidance strategy, which you saw me practice today. Position, size management, cost basis management, risk management is what we specialize in. We have an algorithm that we created that isolates market maker options from the full gamut of options. We can find horse-hand trades at certain levels and predict volume based on options. We use that to trade futures. You didn't know you can do that. Rocket Scooter is the platform that's changed the game for traders for the future. We have created a whole new method that gets rid of technical analysis and just gives you where volume will be at certain prices based on other exploits. And you didn't know that existed. So our boot camp to learn everything we do is $20. That's it. $1 a day for 20 days. It's a 20-day boot camp. By the end of it, you will come out thinking differently about stock market. You will understand the stock market's random. You've been trying to chase your tail, predicting it. We didn't realize that the things you were lacking were betting strategies and risk management strategies and market avoidance strategies. As you know, I show you my stats. I'm about 80% win rate. And while my results don't imply your results, there is a method to my madness. And if you guys would like to learn from me, we're not here trying to sell you a $1,000 course. It's $1 per video per day, and it's live, and it's 3:30 every single day. The link in chat will give it to you, or go to rocket.place/Matt. Rocket.place/Matt. Learn more about it. Read the reviews. We have about 10,000 people using our platform. Thousands of people already gone through the boot camp. It's incredible how much response we've had. Our stream has quadrupled in size because of the popularity of it. And so we really appreciate you guys supporting the community, and we're going to keep giving you affordable, cool stuff, making education available to everyone, because trading pays my bills, not courses. And that's why it's $1. All right. We'll see y'all later. Love y'all. Bye.